Well, good morning, good afternoon, good evening, as we always start our sessions here at Peachscore, given our global program. Welcome to our Peachscore+Dealum demo day. Thank you all for being here. We appreciate your attendance, and definitely thank you to all of our speakers that you will be hearing from today. So to get started, I'm Payman Shamirzadi, co-founder head at Accelerator here at Peachscore, and your host for today. To start it out, here's our agenda. I'll have a few opening remarks, tell you guys all about what we're going to be doing and what our program is all about. We have an amazing panel discussion planned for you today. And then we have some new partner announcements. We will be giving out an award to one of our startups that has made amazing progress and success in the past, I would say 6 to 8 months. And also we have 15 startups pitching for you. And then we'll close out the session. And we'll do all this hopefully in less than 3 hours. So really appreciate everyone being here. To begin, I'd like to thank all of our partners, specifically Plug and Play, who's been with us from day one, and Dealum, are one of our key partners that we collaborate and work very closely with, as well as the LMU Fred Kiesner Center for Entrepreneurship, the federally funded Los Alamos National Laboratory, and many others that you see here, such as HubSpot, Carta, Get Proven, who through their partnerships were able to offer an amazing amount of value in terms of credits and discounts from the overall ecosystem to our founders. Zendesk, TaxHive, WTA, Delve, and Netfork. And I'm happy to announce that today we're announcing new partnerships with Stripe, Marbella out of the Hardware Innovation Lab, OpenAI, and Lacron Golf. And you'll be hearing from some of the new partners after the panel session. Continuing on, I'd like to welcome Sobhan Khani, president at Plug and Play, to our new advisory board. Sobhan is an amazing figure in the startup ecosystem, and we're really pleased to have him as part of our advisory board. He's joining Saeed Amidi, CEO of Plug and Play, who's part of our investment board. And you see several folks from our advisory and investment board listed here, such as Dave Burkus, Seren Ramjan out of Dealum, and other folks. And David Friedman came online a minute ago, chairman of TCA Venture Group. We have an amazing group of people that are supporting us through our journey, and we're quite grateful to have them part of our company. Continuing on, a little bit about our ecosystem. We're now in 103 different countries. We have founders from all over the globe. Together with Dealum, our ecosystem consists of over 150,000 startups, and they've raised over $10 billion. And inside Peachscore itself, we have over 1,600 portfolio members, and they've raised over $218 million. Most of our founders, 70% are in idea and pre-seed stage, and 30% in seed and Series A. We have over 30,000 investor network and over 500 mentors. And our website and all of our social channels gain about 1.8 million annual unique visitors. On the demographic side, through the Peachscore ecosystem, we have 64% of our founders are here in the US, 25% are female and minority founders, 3% are venture-backed, 10% profitable, 45% are looking for international they have international expansion intentions. We're a data-driven company, so as you can see, there's a lot of metrics around our portfolio, and most of this is also available live on our website that you can look at any time. Now, in terms of our data-driven accelerator itself, we support our founders with many different benefits. These are just 4 of the main highlights. Well, one of the key areas is obviously from a funding investment opportunities. Sessions such as this that you're all a part of, being able to bring the investors, corporations, and even governments together in order to provide funding and investment opportunities throughout the program. There's a lot of emphasis around learning and development with daily mentorship, weekly sessions, expert workshops, and we also provide many AI-powered tools and analytics to our founders to be able to build their companies. And we have a very active community and resource pool that they can pull from. So we try to support our founders across an entire year with all these different benefits that they can leverage as they're building their companies. April has been an incredible month. There's been so much happening. One of our founders closed the $4 million seed round, mainly Taylor Meadows. David Kersney closed 1.2 million seed round. Several of our founders have been going through the TechCon competition and winning each portion of the competition, and will be attending the finals. And also, I would like to highlight Carey Hartman, who bootstrapped her startup, and this year she's on track to do over $3 million. And I'm sure we're all going to be hearing a lot more from her. And speaking about TechOn, if you guys haven't heard, this is a premier conference that's happening in Southern California in San Diego next month. It's an amazing conference, over 1,000 attendees. We're one of the partners of the program. We'll be there. Definitely to check out the program and come join us. You get to meet not only our team, but also several of our startups that will be at the Peachscore Pavilion. So the amazing program happening in May 22nd to 23rd. So make sure you come and check this out, and we'd love to meet you in person. And with that, let's start our panel discussion. So if I can ask Alice to come on camera. And Alex, great to see you.
Good morning, everyone. Good afternoon, everyone. So, welcome, everyone, and thank you for joining us today. Before I introduce our amazing panelists and we dive deeper into the conversation, I would like to take a moment to share some context on why today's topic, how a central operating system is transforming a startup ecosystem, matters now more than ever. For decades, startup ecosystems has been fragmented, operating more like disconnected macro ecosystems. Founders often navigate a complex maze of accelerators, investors, banking, incorporation, growth tools, mentorship, and data platforms were all operate separately. In addition, if you look at last year's numbers, more than 4 million companies were seeking funding and growth opportunities. Out of that number, 1.6 million unique applications were submitted to accelerators, but only 48,000 companies were accepted, leaving more than 97% underserved. This is especially significant because this overlooked segment has historically produced many of the world's most promising companies, including Airbnb, Canva, GitHub, Zoom, Dropbox, Rappi, Bricks, Zapier, and even Spotify. This is another clear indication that the current startup engagement and support ecosystem is broken and does not scale. We are entering a new era, I would say, where startup ecosystems may no longer function as disconnected resources, but as unified operating systems, kind of like centralized platforms that streamline everything from company formation and capital access to growth, intelligence, and scale. So today we will explore what this transformation means and how founders, investors, and institutions are contributing to this vision while adopting faster. We are joined by an amazing group of leaders from Stripe, Plug and Play, and TCA Venture Group, who are shaping this future across payments and banking, startup acceleration, corporate innovation, and venture capital. I want to say hi and thank you to Jesse, David, and Sobhan for joining us today. And to start, it would be great if each of you first join us. I think you're off on the camera. And maybe each of you could briefly introduce yourself and your background and your current focus area before we go deeper into the conversation. David, you want to go first?
It's fine with me. I mean, yeah, hi, I'm David Friedman. I'm past chair of TCA Venture Group. I'm also on the board of the Angel Capital Association, also an advisor to Peachscore, which is a great company. I'm a former tech executive, been in the startup world with TCA for about 18 years now, and look forward to finding the best deals for TCA's funds or myself, either one.
Thank you. Jesse?
Tough act to follow. Hi, David, and everyone
How you
else. Pleasure to
doing?
meet you. So I'm Jesse. I am currently the growth lead for Stripe Atlas, which is the largest incorporator of Delaware C Corps, which many of you may know is the standard formation structure for startups across the world. I help the company ultimately increase the number of C Corps that we form each month. I work with all sorts of different entities, whether it's startup accelerators, law firms, even other channel partners like larger platforms, including banks, who are interested in helping their companies incorporate quickly. I've been in the startup world as well for a while. I cut my teeth at Uber Eats in the sort of 2017-18 era for several years. Did an MBA, and then most recently, before Stripe, worked at Headway, which is a mental health startup based in New York. It's now a Series D, but I joined when it was a little shorter in the tooth at the Series B.
Thank you, Jesse, for joining us. Sobhan, thank you so much. I know that you just landed from Japan. So, thank you so much for being here and would love to just introduce yourself to you.
Amazing. Thank you, Alex. And nice to meet you, David and Jesse. Pleasure to be on a panel with you. And great to see you, Alex, again. As he mentioned, I'm president and partner at Plug and Play. I've been with the firm for about 11 years. Had a pleasure of actually working with Alex together as colleagues a few years back. And congrats on building the pitch score and creating this like very data-driven platform, helping a lot of startups around the world. And very briefly also about Plug and Play. We are in 60 different cities worldwide, 27 countries. And we work mainly with corporations, government, universities to bring them to this platform, to connect them to startups, to help them with POC, pilots, investment, acquisition, anything that we can help in the process. We're mainly focused on seed and Series A, very early stage in general, but also, again, work with like a lot of organization in different parts of the world. Happy to be on a call with you guys.
Thank you so much for all of you joining us today. So I want to just start at section one, which is about the fragmentation problem. So as you know, startup ecosystems, as I mentioned earlier, have historically been fragmented across from fundraising to incorporation to banking and growth. So from your perspective, what has been the biggest inefficiency this fragmentation creates within the startup ecosystem that you have seen and trying to solve it with different kind of like being part of the ecosystem? And we can start from again, David. David, you want to
Yeah,
chime
always good to be on the front part to get the shots first, protect the rear flanks there. Yeah, so from TCA's perspective, I just got to mention we have 4 member networks and 5 affiliates, so a total in the group of about 2,000 angel investors, so pretty big. I've been around for a long time. But one of the things that we want to do is find the best deals. And finding the best deals requires us to look at certain pockets in geography and in the market space. For example, you have the Southern California market where we're basically headquartered and we're big in medical device. You have the Silicon Valley, which is big in SaaS, and you have the Northwest, and you have Chicago, which is big in the Midwest in terms of pharma, New Jersey. You have all these pockets of data. The problem with the fragmentation is since we look globally, we look actually, in North America, we can't find those best deals all the time. So the fragmentation requires us to develop partnerships or use platforms such as Peachscore. Shameless plug, obviously, but to use platforms such as Peachscore so we can be able to take a look at this broad number of deals that are in from seed, pre-seed, bridge, A, B, whatever, and then cull them down through some triage method so we can start evaluating which ones go into screening. So it's a matter of there's so much out there, so many deals in the market. We have to figure out who to associate with, who to affiliate with, who should we syndicate with, and how do we build those relationships. That just takes time and resources. There's no single pane of glass that enables me to look across the board.
Yeah, that's a great point. Jesse, how do you see that problem?
Yeah, it's an interesting question. We obviously also suffer from a fragmentation issue in our marketing funnel, but our product is really designed to solve the fragmentation issue for founders themselves. So we often try and imagine the problems that founders are trying to solve in their very earliest days, from the days of incorporation. And when you're a founder like that, obviously a lot of the time now we think about a lot of the glamorous, exciting sort of like growth stage, raising a lot of capital, hiring people. But in the very first days, you need to create your legal entity. You need to make sure your founder stock is issued. You might need a registered agent in Delaware. You might need a virtual mailbox. You need to register for sales tax in like 50 different states across the US, for example. So a
Right.
lot of extremely minute problems you've never solved before. And as a founder, you probably have no sense of the stakes, like what is a registered agent? Why do I need that? Can I do my founder equity later? What should the vesting schedule be? All these questions are very, very complicated. And so the founders themselves really, really value guidance. And that's where Atlas really was born. We wanted to simplify as much of that process as possible in one flow so the founder can focus on building, which obviously at that stage is the most important thing, building and selling the product to prove traction. So that's really where we see the fragmentation. It's in the legal and financial setup of the business. And our approach is twofold. One, we do a lot of this in-house. So we create the entity, we execute the full legal formation package you would get if you went to a top-tier law firm. And then we curate a list of what we consider to be the best early startup partners across banking, tax, accounting, productivity, everything from Slack and OpenAI through to something like Postal, which is a partner that we've just negotiated with to make sure that you can not just have a virtual mailbox, but also make sure you register for sales tax in a variety of different states, to take that off the founder's plate. So that's generally where we see the fragmentation in the early legal and financial setup.
Very interesting perspective. And Sopon, you know that you are the last for this question, and you are sitting in the middle of the startup ecosystem. And I know that you are working with most of the large corporates, many government agencies, and probably tens of thousands of startups. How do you see these problems impacting founders? On the other side, how does this fragmentation impact large corporates and in general, like innovation landscape?
Yeah, I think the way we look at it, I mean, historically, if you look at the numbers and amount of investment going to different cities and different kind of regions worldwide, obviously Silicon Valley has the highest number of investment and venture capital. But there are a lot of corporations, a lot of demand from any other company around the country in the US and also worldwide. And the way we look at it, let's say we have a new partnership with Indiana University or Zimmer Biomet. They're in Indiana. It's not a startup ecosystem necessarily there as much as it's big in Silicon Valley, but there's a demand from these corporates instead of flying back and forth to Silicon Valley. There's an ecosystem there. There's a startup there. They want to work with them. And in nature, corporations are very slow to move. They have a lot of money to kind of try new things and invest and do POC. But as a corporate, they're slower to move versus startups. They're nimble, they're agile, they want to move faster, but they don't have as much resources. So what we do, I mean, obviously we're not as in depth as like what Stripe has and like helping them with like different activities they do. But what we're good at beyond the investment is like making connection for these startups to big corporations for potential POC and pilots and activities there. If you look at our ecosystem now, obviously we still run in Silicon Valley. A lot of our investment comes from Silicon Valley. But again, just in the US, we have more than 20 different cities that we operate in. And we try to be like the matchmaker between startups and corporates and now governments. I think what governments want, they don't want to fall behind what corporate innovation has been happening the past few years. And with the speed of AI, they want to implement some of these new technologies to be more efficient and be faster. And also in general, working with economical development corporations, different city, different state, what they want to see is job creation. They don't want to see like more jobs in Silicon Valley. They just want to see more jobs in Orlando. They want to see more jobs in like Texas. That's why a lot of governor that we work with them around the country also like they're pushing these initiatives to like work with them. So I think like building that platform and connection between all this different ecosystem. And I mean, we've seen startups in Silicon Valley that want to go expand, go to Japan. I just came back from a trip. They had this like event called Sushi Tech. This was a third year. And I would say it's kind of a smaller version of like what you see at CES. But every startup ecosystem around the world is like growing and making these connection for the startups to jump from Silicon Valley, go to Tokyo, build their business there, expand their business there, go to Munich, and then being that bridge. I think it's what helps our corporate client, what helps us for finding good investment, not only in Silicon Valley, but around the world, but also helps the startups to expand their business. And that's what we're good at in terms of business development.
This is great. I mean, I'm following the news of Plug and Play every day, so I see every day is a new office, which is congratulations for such a building such a big operation, global operation, I would say. So now, if I would like to shift gears into the concept of central operating system. Each of you comes from different background and with different. You're part of different part of the startup ecosystem, that's why I would love to tailor this section a little bit more, and I start with Jesse this time. So Jesse, Stripe transform payments into infrastructure. This is how I see that. I believe Stripe has one of the most creative teams and platforms, while a wider range of products that support entrepreneurs from incorporation to managing online payments. Then we have banking and even accessing non-dilutive funding through Stripe Capital. So as a startup ecosystem evolve, what does the true operating system for a startup look like, in your opinion? And what role do you think, in general, Stripe or Stripe Atlas or Stripe Capital in general kind of can play in that future?
It's a great question. You should be on our marketing team. You're doing a great job publicizing. I couldn't have said it better myself. Yeah, I mean, they're a really good point. I think when I hear the word centralization, immediately I imagine whether or not the needs are actually truly homogenous, whether everyone actually, can use the same tool. Like ultimately, I think in an ideal world, everyone would use the same system, completely centralized. They don't need to reinvent the wheel. There's no customization or anything like that. Of course, that would be ideal. It would be very, very efficient, economies of scale, everything. I think the issue is, in reality, for a lot of different business functions, the needs are really different. And so there is a natural ceiling on the extent to which we can centralize something in the business world. I think it's certainly true in startups, but I think what we, at least the Atlas team, have found is that there are, even in a world as diverse and fast changing as the one we're in now, have found there are truly homogenous needs at those first stages. So like the things I mentioned before, the first things you do when you incorporate with Atlas, besides incorporation itself, which is of course the one true thread
Right.
across all these businesses, is setting up your founder equity agreement, is your director indemnification, your IP assignment. That legal infrastructure now is truly centralized because it's the same. No one really wants to reinvent that. And I think that's true for banking as well. I think most banks, and I'm sure some of our partners might disagree, but generally speaking, for those early days, banking services for an early stage startup are largely the same. So you don't need to, reinvent the wheel. And that's you may have seen recently. In fact, just yesterday at Stripe Sessions, we announced Stripe Treasury, which is an account that allows you to, without opening an external bank account, store value, spend with a card, transfer to 150 different currencies without even leaving the Stripe dashboard, which goes to show, I think, how commoditized at least the early business functions are. So that's how we think about centralization. We look at what are the most commodified early steps in a founder's journey, and where can we incorporate that into our product? And for other products that can't yet be centralized, that are a little more differentiated, like for example, a productivity suite like a Slack, which is obviously a little different. That's where we'll steer folks to other partners and that we're not comfortable centralizing yet. So I think that's the litmus test for us. How truly homogenous or commodified is that product? How homogenous are the needs versus how heterogeneous are those needs, and where do we need partners to work with us?
Makes sense. Makes sense that was a great kind of about learning of how a Stripe looking into this, fragmentation and operating system. So Sopan, my question now is for you about this topic. How do you see that the accelerators in general kind of can evolve from being simple programs into becoming a scalable global infrastructure? Because right now, as you can, probably see the stats, as I mentioned earlier, last year only 48,000 companies get accepted. So how can we build that a scalable infrastructure, which I believe that it is part of plug and play DNA and vision to make it scalable as much as possible. But I would love to just hear from you. What is your perspective on this?
Yeah. So we have a platform within Plug and Play called Playbook that we track all the interaction between corporates and startups there. We have a little bit less than what you have, about 110,000 startups in our database, in our platform. And when corporations, they come in, they ask for specific technology interest, our venture associate look into the database, they go to different conferences, they try to like find a good match for them. I think this happens very manually if you think about it. Like, and with the big ecosystem that we have, like sometimes it's hard for a human brain to like think about, oh, there's a company in Singapore might be a good match for this corporations in Munich, and maybe they don't have as much of the knowledge. But I think the system can kind of like figure out, find those matchmaking that can happen outside of our venture associate mind, but also in the central system. This is something that can be future of what we offer, beyond the specific program that you go in Paris, you go in like Munich. And as you mentioned, there are a limited number of companies that we can accept, but there might be a good use case for the technology they have in somewhere else in the world. So I think that can be a future of these programs beyond just like 3 months and any time. And our venture associate, basically, they every year our team, they review between 10 to 15,000 companies. That's a big number for anybody to like know as an individual. But I think the system knowledge is a much bigger and better to like find the better deals around the world for any corporates or any startups per se.
No, this is great. I mean, I think using your playbook, I mean, the platform that you have, that means for founders that after the program is not going to be end for them. So it's gonna is a new big beginning. I would say that because you keep your teams matchmaking them with corporations, and they might get new opportunities. I would say that through
Yeah.
the kind of engagement and
And
being
honestly,
part of the ecosystem.
today it doesn't end. Like, I mean, when the 3 months program ended, like, and then tomorrow there's a corporate comes in and there's a match, we introduce them together. But I think this still happens in our team's mind. And I think they can happen like more automatically, more seamlessly when corporates come in. And we can even, hopefully, if the platform gets better at some point, predict, okay, these corporates need X, Y, Z. So maybe we can be more proactive to like suggest something to them versus wait for them to come back and ask us questions.
Makes sense. Makes sense. So David, what are your thoughts? I mean, because how do you think the centralized kind of intelligent kind of like a founder intelligence or a standardized a startup data can improve the venture capital decision making, as you are working and been with TCA for many years, an investment.
Yeah, so I'm glad you asked that question because I was going to pivot back to the operating system because it's really central to the way a TCA, another angel group, a micro VC, and it really leverages what both Jesse and Sobhan said. But to me, I mean, it would be nice to have an operating system. I come out of the telecom market, so we know the operating system, you have telephones attached, everything is easy. So you pick up a phone or you make a cell phone call and everything is behind the scenes and everything works perfectly. It doesn't kind of work like that in the investment world, in the early stage world. It's sort of like making sausage many times. It would be nice to have one button to push and there's an operating system behind the curtain and come up with the best deals, but it doesn't work like that. So the operating system today is really a combination of the tools, which Jesse pointed out, the workflows and the relationships that Sobhan pointed out. So for TCA, we have certain tools. For example, we use a deal platform. I know you're co-sponsor with Dealum. I think they're great. We use Startup Steroid. There's also Gust. There's also workflows that we put into place that are part of that operating system. And the workflows and the tools in combination enable us to go through this following process: to find deals, to evaluate deals, to invest in deals, and to manage the portfolio. And within each of those elements, we have certain tools that enable us to do that. For example, TCA has developed an AI triage system called the TCA Investment Readiness Report. So when a deal comes in, we can actually review a deal and within 6 or 7 pages, have a color-coded analysis of the deal, whether or not we want to pursue it. We can then find the deals that don't meet our requirement. We can tell the entrepreneur what they need to do to improve. Deals that will really scoring well, we can move them fast track into due diligence. And then we have this other group that goes into a pre-screen process. So that's part of the workflow. As we get into then pre-screen to screening to due diligence, we have tools in due diligence so that the teams can put together a good investment report. And then depending on which group you have, TCA, somebody else, you either have funds or no funds, and you have certain algorithms that and mechanics that take place for an investment to be made. So in a sense, there's no really each group has their own operating system, but the operating system is not one singular entity. It's really a combination of things. I hope
Mhm. This-
I hope that makes sense to people, but and maybe if somebody else has a single button push, I would love to see it, but I don't have it.
So my follow-up question is that do you guys think that believe that the future belongs to all in one ecosystem platforms, or will specialized
Nah,
tools continue to dominate?
I
Like,
I think when you say that, I keep thinking if you're a stereophile, you have a really good G5 LG system, and you have an AVR, and you have subwoofers, and you have other kind. You have a Dolby system, you have a 7.2 surround system.
right.
The all-in-one reminds me of my early days. I'm dating myself with a boombox on my shoulder in the streets of New York. There's a big difference. So each group has to figure out exactly what they want to do, how they want to optimize their systems for the benefit of their constituents. So all the constituents are different. So I don't think there's one size fits all. The boombox doesn't work, but it's usually a combination of different shared services tools and deal platform, which is really the central key to all of the investment, groups in my mind. You can't really do anything without some kind of a tool platform to manage all the deals that are coming in and going through the system.
I see. What do you think, Jesse, about this? Do you think it's going to be more specialized, or is it going to be more kind of all in onto platform?
I mean, I have to agree. I wish I could give a contrarian take to be exciting. But no, I tend to agree. I think ultimately, it's this classic. What I didn't mention, I was in consulting back in the day. I'm reformed since, I promise. But I remember in that job, we often spoke about the trade-off between a best-in-breed solution and an all-in-one solution. And that was also some time ago, dating myself. I think it's a perennial question. I think for the rest of time, there will always be certain situations for certain clients where it is better to have a best in breed approach and you tolerate the inefficiency of having to navigate across different solutions. Ultimately, it depends, which is the best line I learned in consulting.
Depends.
Good
Yeah.
point. Sobhan?
So I tend to agree with both the other panelists. Not gonna go against them. But I think
Okay.
in general, I mean, you are gonna be in good area, and then you're gonna continue being good in that. And the way I think about it, like let's say WeChat that we have in China, they try to do everything in like one platform, but we don't have that in the US. We don't have one single, app that does everything for us. And a lot of companies they try to go that way, but again, every company is good in like one certain things, but and it seems like we continue to be like that, but we'll see.
Okay.
I miss WeChat, by the way. I
Fair.
used to use it when I was involved with a Chinese company. She was in the United States, but she was Chinese, and we use WeChat all the time. And man, once you get used to it, now we're using WhatsApp, for communication, which is another tool for communications. You can do the communication because that's another part of the operating system, communicating with your startups and communicating among your members. So we're using a combination of the dashboards within Startup Steroid. Dealum has something similar, as well as WhatsApp to support, generalized communication. I don't know that there's one unique tool that will do it
That makes
at
sense.
this point.
Makes sense. Makes sense. So no, that was a great kind of like observation and insights. I want to just go deeper into AI data and scalability.
Mhm.
So if you look at what has happened over the last few years, it's fascinating to see how AI has started changing our lives and the world, right? So in 2018, GPT-2 was introduced as a major concept. Then by 2021, we saw wider creators adoption through tools like Jasper, Copy.ai, and Midjourney, right? And then in November 2022, ChatGPT launched publicly, through OpenAI, and disrupted every aspect of how people live, work, communicate, and even think, right? So I believe, are often, the startups in general are often kind of in the front line of innovation. because of their ability to move fast, operate lean, and take greater risks that typically large corporates are not going to just make that move fast like startups. So, in your opinion, how is AI changing startup ecosystems beyond productivity? Especially in founder discovery, deal flow, customer discovery, pattern recognition, and predictive kind of success in different aspects. And we can start with David maybe this time.
Wow, and that's a whole subject for about an hour or two discussion. In fact, it's going to be part of the podcast that we do at TCA Crossroads. I think Dave Burkus and I are going to discuss this. And it came up last week at the ACA Summit. About 80% of the discussions focused around AI. So AI is becoming a really good tool for improving productivity, and it's part of that improving your workflow process. As I mentioned before, TCA has been playing with and implementing a TCA investment readiness report. So we're using AI. We use AI to help in doing our due diligence. We use it as a tool. We can actually, we've developed a singular prompt for use with Claude or with Gemini. It works better with Claude or Gemini because of the way they're set up vis-a-vis ChatGPT. The triage tool works great with ChatGPT. But what we have been able to do is have this put all the data into this into the AI system, the executive summary, the discussions with customers, discussions with the CEO, our 21-page discovery report that we asked the founders to fill out, the deck, and any other information. Put this huge prompt in, push a button, the AI ingests it and comes up with a really good, solid 40-page due diligence report. And you have two choices. You can say, this is great, it's perfect. Or you can do what normal people do, is include the human in the loop, because without the human in the loop, you have hallucination. And each of these AIs do things a little differently. So if you ask it to evaluate 10 items, it says, well, I only have 200,000 tokens. I'm going to put 50,000 here. I'm going to kind of eliminate the tokens used here. So you get really weird answers. But it's a good start. And what I found that AI with a human in the loop can do is help triage, get a lot of stuff out. We may make mistakes, but it's pretty good, especially when we see so many deals coming in. And on the back end, in the due diligence, having the ability to figure out what the AI says by section, and then you allocate the people on the team to those sections. So, Alex, you're involved in leadership, and Sobhan is involved in deal structure and business model or whatever. And then you take that information and then you start engaging with the AI, asking the right questions, and then you make the final decision. That's the human in the loop. But the other way that AI is good, sorry if I'm doing this soliloquy, is, and we just did this also in a TCA podcast. We looked at the deals that were successful. We looked at the deals that were not successful. And what's really good about AI is, and to your point, Alex, it's really good on pattern recognition. So we can take a look at the deals that work well, the deals that kind of like blew up, and the deals that are kind of like middling. And we were able to determine the things that we need to do better to improve our hit rate. Hit rate being the number of deals that have good exits. And the second part of that is figuring out the deals that have the highest ROI or the highest MOIC. So it's very critical. AI is a really great tool, period.
So David, can we say that you guys are kind of pre-screening the companies when they apply to your fund with AI at this point?
We do a couple of pre-screen. We pre-screen to get them into the application process. The application process then has a quick pre-screen, and we may rule things out. So we have a filtering up front, and then when a company applies and it's into our deal management system, it will produce a TIRR report. And then the screening team or the pre-screening team or the group that evaluates, because each of our networks does things a little differently, will either run the report now, run it later, or make decisions based upon that. It's not a perfect system. It's not one button in or out. There's a human in the loop regardless.
I see. Got it. What are your thoughts, Jesse, on this?
Look, I agree with David. I think this AI thing's got legs. I think it's going somewhere. I think I was investing. I would
I'm
invest.
glad you felt that way after how many years?
That's right. I think from our perspective, it is enabling an incredible capital efficiency in companies at their earliest stages. And I think one of the ways you see that is the increase in the incidence of solo founders. Over the last year on Atlas, we've actually seen the largest one-year increase in the share of solo founders in the history of Atlas, which is to say something like from sort of 50% or so a year before to something close now to 61%, I think last month, of
Mhm.
Delaware C Corps now founded by solo founders. It makes a lot of sense. I mean, for all the reasons David mentioned then about the ways these tools can improve your efficiency and your productivity. We saw a really interesting data point from Carter, the cap table management company, that mentioned from 2019 through 24, there's a 50% increase in the amount of time to your first hire in a startup, which
Wow.
is huge. So you really don't need to hire, you don't need as much capital early on. Obviously, it varies by business type, but all else equal, you don't need as much capital early on. I think that's one of the reasons we're actually seeing an incredible surge in business formation generally. Like obviously Atlas is doing quite well. We've improved market share of the corporations that form, but
Mhm.
the actual size of the pie, the total number of Delaware corporations is dramatically higher. Last month, there was a 48% year-on-year increase in the number
Wow.
of Delaware corporations. It's an all-time high historically in Delaware. So I think it's not just allowing for, more founders to start companies. It's allowing those founders to, resist the temptation to raise capital and dilute themselves early on.
This is a great point. Sobhan, what are your thoughts about AI data and scalability?
Yeah, I think there's a friend of mine who's a GP at DCVC. You know him, Ali, who wrote a book called Super Founders. And what
Yes,
he
I
did
know
is like
him. Yeah.
looking at the historical data of unicorns and what are the metrics of like success, like which university they're coming from, how many co-founder they have, like different elements. And I think that was a statistical work that he did. I think some of this can also happen through this like brain, the machine brain and the way that our team sometimes look into like, okay, there's any patent from like a specific founder, and then try to like see, okay, this guy probably sold a company before, he's capable of probably starting a new company. And I agree with also Jesse in terms of like number of solo founders. I really love the Peter Walker from Carta, like stats that he usually shares on LinkedIn. Also, Ilya, professor
I
at
love Peter Walker. I'm so
yeah,
glad you said that.
he's celebrity in our world, right? Like, and also Ilya from GSP, I think he also shares really incredible statistic of unicorn founders from different city, different states. And again, I also agree. These like brain can kind of predict where we find this new unicorn coming out, new founders coming out, and hopefully creating a more efficient market in general.
So how is it impacting the plug and play itself, the Sopon? I mean, the AI and scalability, are you guys starting to integrate any kind of AI or more kind of like these kind of approaches into your processes?
No, we're trying. I think we're trying like any other company. I think in general, having some sort of an agent to also help our staff for now, and then having that human
Mm,
in the loop
Yeah.
that David mentioned in the beginning, until we get to the point that maybe the system can do a better job than what we do. But I mean, as of now, we always have the human elements in the loop. We're trying to get better, but of course, this things move really fast, and it's very
mm,
hard to keep up with all the changes. And I think I see that in myself and a lot of probably other executive and management across the companies, that there's a overwhelming AI elements that people are trying to keep up with things, but it's also very hard
mm.
because it's moving very fast.
It's very interesting. I was reading an article a few weeks ago that was mentioning that most of the loans for individuals under 25 or $35,000, the decision is happening by AI. So there's no human involved into
Yeah.
approving or declining any individual loans under 25 or 35,000, which is this is huge because this is especially because with individuals we are dealing with credit score and a lot of hard data and financial kind of background, and the decision is a little bit I would say is risky, but even that means that the confidence of using AI got to the level that even for individual loans, AI is making decision for certain kind of numbers. So we covered the past and present. now I would like to a little bit kind of like talk about the future, right? And let's say in 5 years from now, what does the ideal startup journey or corporate journey or kind of engagement between these entities and and individuals, you know, it looks like. I mean, in your point, what does the future means for, let's say, for investors, for a Stripe, for TCA, for plug and play in terms of engagement deal for investment? So how do you want that future evolve over the next few years for you guys?
You want me to start this? Well,
Yeah, we
let
can.
Jesse, I'll let
Anyone.
Jesse
This is
start.
this
Yeah,
is
Been the
no,
best,
go ahead.
David. Maybe you
You're the
should go
lead guy,
first.
Jesse.
I wish I had enough to angel invest. I'm not even at that stage. I went to business school a few years ago, so we're recapitalizing the
Yeah,
personal
we
balance
do
sheet.
take credit cards, by the way, just to let you know. And
Great.
Stripe, we just want to let you know, yeah, we're okay with that.
Oh, terrific. Great. Okay. Well, we'll shout after this. It's just to rephrase your question, Alex. So
So the
essentially,
question mostly is that like if you look at the future in 5 years, how do you think that the AI and the data can play a role within the Stripe that you guys are happy? So because I'm sure that each corporate, either you're a corporate or investor, you are trying to develop and look ahead and start testing new products. So how do you see, in your opinion, from the perspective that you have through Stripe, how do you want to see the future in 5 years
yeah, it's a great question. I
or
think
10 years?
I could barely tell you in 6 months. 5 years, 5 years is a stretch. I'll try my best, but I do think, I mean, again, I would encourage everyone actually, if you haven't heard of Stripe Sessions, it's our annual conference. It's happening literally right as we speak. There's a ton of fascinating announcements in this space. For example, allowing agents to pay with Link. So you can actually get your agent to make purchases on your behalf with a
Wow.
one-click authentication. It's really, really cool stuff. From the Atlas side, I think of it in two ways. One, how does AI enable our team to function more effectively?
Mhm.
And then what features are we able to launch that we would not have been able to launch before?
Mhm.
And I think internally, I mean, I'm sure you've heard this story 1,000 times before from different product managers, but I now am able to write, a pull request, PRs for the non-technical folks in the room. It's sort of, a formal proposal to change the code base. I can do that now with AI. And we have agents that allow, they're called minions, colloquially called minions, where you can literally, through a prompt, describe what you want. And that minion, because it's connected to the repository of code in Stripe, figures out exactly how to do that from a natural language prompt, creates the pull request, gets an engineer to review it, and it goes live. I've never done that before in my career. I've started doing that in the last few months. So I think internally it has unlocked a huge amount of technical work for non-technical people like myself, and obviously improve the productivity of those who are already technical, who can use these tools more effectively than me. So there's a lot of improvement we're seeing on the efficiency side. But I think what's really exciting is what we can do for founders differently, not just more efficiently.
Mhm.
And I think one of the interesting ways we're exploring that is, for example, allowing agents through the command line interface, the CLI, to incorporate without ever having to actually visit our website. So you can actually say, I mean, there's various ways it could actually work, but we're currently building an approach that will allow let's say, for example, you're in, I don't know, a Lovable or a Cursor, or you're just in Claude Code in whatever native environment you use for your LM today. You want to incorporate a business. It will pull through an API or MCP all of the information from Stripe Atlas that you need to answer and then send back to us to incorporate without ever leaving that
Mhm.
interface. So it could be done in truly, a couple of minutes if you have your ducks in a row. But speed is not necessarily the most important part of that value prop. It's allowing you to do that without exiting your environment. That centralization
Mhm.
that I think you were talking about before.
Yes, right. Yeah.
Um, so that's really, really exciting because it allows you not just to do that, but allows then if you manage your business from that interface, it allows you access to all of your incorporation data, all of your legal data, all of your legal documents. And of course, then if you sign up with banking and payments with Stripe, all of those things as well without actually needing to go
Mhm.
through the authentication process, credentialing process with Stripe itself. So I think that's really exciting for us from an AI point of view. There's so much to say here.
Yeah, I'm sure that's gonna
To
be
David's point, I
by
know, and
itself
that's
is
but
gonna
that's
be.
one. Yeah, that's one I'm excited about. But yeah, I'll
Yeah.
leave
But
it
this
there.
is great. This is great. Sobhan, how do you see it? What are your thoughts?
Yeah, I think historically I heard this like phrase saying like people usually overestimate what happens in like 1 year and underestimate what happens in 10 years. I think with the speed, maybe there's some truth
That
to
was
it
Bill
now.
Gates. That was
Yeah.
Bill Gates.
But
Yeah.
also I think with the speed of change probably would be even hard for like 1 year now. I don't know. But
Mhm.
also I see like this like future as like maybe we have like these agents that they evaluate the agents from the startups or agents from corporations and find the inefficiencies that they can like work together. And I think there was Tony Fadell, he mentioned in one of the with the panels he had in one of the events that maybe we need to have HR for these AI agents because where did they go to school? How did they learn? What are the where did they get their data? And there's a great truth to that because the same way that we do for humans is also for the agents. Like, what was the data set that they train on? Like maybe there's some inefficiencies and like wrong data there, and we have to check to have this HR for AI agents. And again, agents of investor, agents of corporations, agents of startups, they talk to each other to find those potential opportunities.
And
Mhm.
actually extending that analogy, sort of, anthropomorphizing the agent a little further. That's how we think of them at Stripe. We're actually imagining, for example, I was literally right before this meeting talking with our team about what it would mean to be an agent's first choice every time for incorporation. So really imagining the
Interesting.
agent as a person. What preferences does that agent have? And obviously they can be inbuilt by the user, but possibly also by its innate training. So really imagining like a
Right.
world of agents essentially acting as people do today.
Well,
This is
it's
absolutely.
interesting because we have seen at TCA digital twins as well as robots that have emotion. We're seeing a variety of different startups coming in. Do I trust them? Not sure. I'm a technologist. I don't know if I have a, a technology background. I've been in the tech world for a long time. I may have a different point of view. I agree with Sobhan. There's no way I can see 10 years, but I can tell you a couple of things that will probably happen based upon history. Number one, we won't be talking about AI the way we're doing it today. Just like in the 1990s, I know that's before your time, Jesse, but in the 1990s or the 2000s, we had that dot-com era and everyone was saying, well, now everything is with the internet. Remember that? Everything is with the internet. You don't hear that now. It's assumed that's like part of breathing. You have to have internet as part of the fabric of any company. If you don't have it, you're kind of in the Stone Ages. You're going to see the same with AI. What you'll probably see, to Sobhan's point, are different agents for different specializations. But what I also see are two things. Number one, you're going to have the ability for a person to interact with the quote, whatever operating system, AI agent in a very normal communication voice. So I'm going to tell it what I want, and it's going to know me well enough based upon my prior history. I mean, chat's doing that now with me. It actually says, do you want me to be like you, blunt, direct, aggressive, or do you want me to be nice for a change? And I have a choice. But it knows me well enough to know how I want to answer. That's going to be part and parcel of what's happening today. So you're going to have voice interaction. It's going to be a lot clearer. You're going to have agentic AI. It will make certain types of decisions. But I believe from an investment point of view, there's a concept called garbage in, garbage out. And if you put the stuff in and you just determine your answer based upon what is written, it's still the hallucination issue because all the AIs are set up by humans. It's trained in a certain way. So you got to be a little careful. I think you're not going to eliminate the human in the loop at all. I think
Makes
that
sense.
would become
Yeah,
a
yeah.
problem. It's like the old movie War Games.
No, this
You
is
don't want AI to go off on its own and do stupid stuff. So I do believe you're still going to, from an investment point of view, you're going to rely on building trust, building relationships with valued groups, finding those groups that make the best decisions. So I can find, as from a TCA perspective, those entities that have the higher hit rate with a higher MOIC or IRR, so I can get the best returns from my constituents, which my LPs or investors. So I can't see beyond. I agree with Sobhan. You can't see 10 years. I mean,
Yes, it's
it's
moving
going to
very
be
fast.
different. It's going to
Yeah.
be better. It's going to be more mechanized. You're going to have more tools. But where that goes, it's just changing so fast over the next year. But I do believe in the next year or two, you will find that AI will be a great assist to improve your workflow, improve your your ability to make decisions quicker, and the ability to process more information at a faster clip.
This is great. I mean, I would love to talk about this for another few hours, but we only have 4 minutes, so I have to wrap it up very fast and quick. So before we wrap up our conversation, I would like to open the floor for your final thoughts and recommendations for founders or anyone in general listening to this conversation.
I'll kick it off because I'm on a roll and I'm very highly caffeinated at this point in the morning. Uh, so for the founders out there, what you really need to do is understand your audience. When you make a pitch to an angel group or you put information and think how the angels or the early stage investors think. We think in terms of two things. We think in terms of growth. We think in terms of, whether or not it's a good investable type of business. Make sure you have it very crisply laid out what your elevator pitch is. So early on, I understand the context so I can make an intelligent decision and try to help you out. But if I don't understand what you're doing, I don't understand how you're doing it, and you just get into the weeds, you probably won't get my attention. Understand your audience first, and then make your story compatible with that audience and try to make it emotional. Try to give you some kind of a hook that makes the angel VC, accelerator want to listen.
No, that's a great point. Sobhan, you want to go next?
Yeah, I think in the age that we have Anthropic and OpenAI and all these giants that they can come up with a new solution and tomorrow wipe out it like sector of the startup market, I think it's really important to think about the moat and how you want to defensibility of your technology and like the solution you're bringing to the table. I think that's probably the key and it's becoming even more important than before.
Thank you. Jesse?
Yeah, and I'd say in addition to both of those things, because the world is shifting so quickly and the earth is really moving beneath our feet at a faster clip than usual, I think your team is more important than ever because I think they, at its core, that's the infrastructure that will endure with you through all of those changes. So you need to make sure, whether it's a co-founder or co-founders, your first hires, contractors, anyone truly, even partners around you need to be truly the best, like best in class, because they're the ones who not only will allow you to navigate those early shifts, but will be the ones who choose the next generation, the next tier of folks who work at your company. So I think still focusing on people, which I think is truly a timeless piece of advice, that is the core of, I think, good, not just perhaps investing, but also.
So Jesse, you're saying people, you won't have machines replace people. The machines will help people do better as people.
Absolutely.
And making decisions.
Absolutely.
I totally buy that.
I think Meta doesn't agree because they're laying off 8,000 people within the next 12
That's because
weeks.
they probably didn't do zero-based budgeting and they just let things grow like everything else.
Yeah.
Yeah, that's a great point.
Go hire them. That's my advice.
Yeah, for all those solopreneurs, you have a big group of people looking to be employed at a very low rate.
You're not wrong. Well, I mean, a lot of these folks are going to go into acqui-hires or things like that.
But this is great. I mean, again, I would love to just continue the conversation for hours, but again, we are almost 10, so 10 a.m. and we have to finish the conversation. So thank you again. Thank you so much, Jesse, Sobhan, and David, for your time today and sharing your insights. And thank you for all being part of this conversation and listening to us today.
Yeah, great to see you, Jesse and Sohan. Really good job, Alex, in moderating something that's extremely valuable, both for the investor as well as for the entrepreneur. So thank you for letting us do it.
Especially with someone as blunt and difficult as David. That was really
Yeah, I'll have to go back to my AI and tell me how to do better.
Yeah.
Thank you so much. Thank you so much, everyone.
Amazing. Thank you all. Really, really appreciate it. Great job, Alex, and everybody else. Jesse, if I can have you stay on. Sobhan, David, thank you so much. Really appreciate it. Folks, we're going to switch to our partner introductions. So you guys all been hearing from Jesse for the past, 50 minutes or so, but I do want to put him on the spot for just a few more minutes. So, Stripe is now one of our partners, as I mentioned at the very beginning. And so we're very, very excited to have Stripe as part of our partnership ecosystem. Jesse, thank you so much for the time you spent with us this morning. I'd love for you to share a little bit about your thoughts regarding the partnership itself and
Yeah.
working with us and what we do in terms of being able to support founders, from ideation, and on, and it's a global organization where people are trying to expand into the US, and it's working with you guys and what you guys do at Stripe Atlas is so natural.
I completely agree. I'm really excited to work with Peachscore. I think without belaboring the points made earlier in our panel, it is a great way to centralize and aggregate a lot of really important tools that founders need at the very earliest stages. As we mentioned, it's really tough to find founders at the right moment. I actually did a lot of UXR with founders in the last couple of months to learn about why they didn't choose Atlas. And half of the time, they weren't even aware of it when they made their choice. So I'm really,
Absolutely, yeah.
really grateful to Peachscore to be able to make sure that we get to founders at the right moment. Very quickly about Atlas, I know I mentioned that we
Yeah,
incorporate business.
please. Yeah.
Yeah, so we now incorporate 1 in 4 Delaware C corps, which is the most of any of those incorporators around the world. We've incorporated everything from Linear, Cursor, Lovable. A lot of those fastest growing companies started with Stripe Atlas. And we don't just get your tax ID and incorporate the entity and the registered agent. We set up the full legal infrastructure so that you can fundraise, you can sell, and you can hire within 2 business days. So that's all of those legal documents I meant earlier, but it allows you to do that truly in a few clicks within those 2 business days for only $500. For those who may have incorporated companies, 5, 10 years ago, they probably used a lawyer. And they probably spent
Absolutely.
$10,000.
Yeah.
Yeah,
Yeah.
so we're really proud and privileged to be able to play a role in those journeys. And I'll say finally, also, we do enable the financial setup of the business, not just with Stripe Payments and now with Stripe Treasury,
Mhm.
but also with other partners. You're not wedded to use Stripe products. You can set up a bank account with our external partners, Mercury, Brex, Row, Meow, and obviously a smattering of other really, really great partners out there who have offered discounts to those who incorporate with Atlas. OpenAI, AWS, Google, you can view them on our website. So we're really excited to support your founders.
Yeah, absolutely. We love it. Really appreciate it. We always had founders come in and ask us, okay, we need to incorporate in the US. What do we do? Now we have an amazing answer to that. So thank you so much again, Jesse, for your time. Really appreciate it. Really looking forward to working with you long term and supporting founders globally. Thanks so much. Have a
The pleasure.
wonderful rest
Let's
of your
let
day.
someone else take the mic now. I'm sure everyone's tired of me.
Absolutely.
I'll
Thanks
see
so
you
much,
later.
Jesse. Have a good one. Okay, our next partner I'd like to introduce is Dr. Jason Dow, founder and CEO of Marbella out of Harvard Innovation Lab. Dr. Jason Dow. Jason, how are you doing, sir?
Doing great, doing great. How are you? How are
I'm
you?
good. I'm good. Thank you so much for taking the time and being with us. I'd love for you to share a little about your organization, what you do, how you support founders. And, we love the fact that we're now partners together and being able to support founders collaboratively. So please.
Definitely. Thank you so much for the opportunity to join this demo day. So I'm Dr. Jason Do, founder of CEO of Marbella AI. So we are AI education company out of the Harvard Innovation Lab. We are deep rooted into the Harvard MIT startup ecosystem. Our mission is to empower next generation with AI literacy, identify and cultivate future AI leaders. So one of the approach we are taking is project-based learning approach. Basically, we're guiding our students to working on different AI relevant projects, can be AI research or like a AI, like a startup AI innovation. So basically, I think this first of all, actually, we have a perfect pipeline. So we train our students to build something meaningful or interesting first, giving them like a basic AI skill and AI entrepreneurial skill. Then we can send them to Peachscore because you are like an accelerator, right? So I think that's a natural combination or for joint marketing. But actually, I'm in New York City right now. I've been here for most of the time in the past 2 weeks, and actually I'm flying to Omaha tomorrow, attend the Warren Buffett event, so meeting lots of investors there. And on Sunday I'm flying to Miami, attend a family
Wow.
office investment event. Like I'll be in Miami for another week. So really, I travel global, travel nationally to meet different founder investors, and I hope to go to Los Angeles soon to meet you guys. But really,
Absolutely.
I think we have, and then I think we share also a common education mission, right?
Mhm.
You are there to train like entrepreneurs, but and you have this democratization mission because YC can only serve 1% of the startup, but you try to provide the YC skill of expertise and the services and the resources to massive amount of people. I think that's amazing. And we are bringing most of our resources from East Coast, like the Harvard, MIT, New York City, and to the ecosystem. Really, I think as a bigger system as a whole, we all grow together. I think they're helping people. That's awesome. Yeah, thank you again for this awesome opportunity. I look forward to our collaboration. Yes.
Absolutely. We're also looking forward to it. This very extremely synergetic between what you're doing and how we support founders. And it would be great if we can all spend time at the beach that is behind you. So that would be good too. So
Of course, yes.
Thank you so much, Jason. Really appreciate it. Okay, let me continue on here. And our next presenter, unfortunately, she's not available to join us, but let me introduce her to everybody. So she had a conflict that she wasn't able to get off. So I'd like to introduce our newer partners, Lecron Golf and Irina Desambikov. She's a founder of Lecron Golf, and what we're doing together is expanding our organization into Qatar and being able to. Qatar has a very fast-growing startup ecosystem, and with Irina's support, we're able to really make an impact within that country and the region around MENA, being able to support founders at scale there. Unfortunately, she's not able to join us today, so you can hear from her directly, but I'm sure we'll be able to get her at a follow-up session so you guys can all learn from this. But this is going to be an absolutely amazing extension to what we do at Peachscore. We are a global company, and having Irina as part of our organization will really help us in terms of the footprint that we want to have all over the world. So let's continue on. And next, I believe we have Taylor. So this is our startup award section. So I'd like to introduce Taylor Meadows. Taylor, hopefully you're here with me. If you are, go ahead and come on camera, please. So there you are. How you doing, Taylor? So Taylor has been with us since for some time now, since last year. He was in one of our cohorts last year. We worked together extensively, and he's been doing amazing. I mean, every time I see Taylor, he's won something new. He's accomplished something else. It's absolutely amazing. Last year, he won this award at a competition that he went to. And just recently, he happened to come on one of our calls and said, Paymon, guess what? I just closed my $4 million seed round, and we're absolutely ecstatic. And I'm sure he's going to be, this company is going to be growing extremely fast, and he's going to be winning a lot more as things are going forward. And because of his accomplishments, we are giving him the Startup Award for his successes to date. Taylor, how's it going? How's all the success treating you?
It's going well. It's super exciting to have our fundraising now closed, and we're accelerating development, partnering with some large CPA firms, getting more customers on the platform, and more importantly, helping a lot of companies get access to a lot of free money from the government.
Absolutely. I love it. It's been absolutely incredible working with you and seeing your success. Tell me a little about your Peachscore journey. I love our founders to know how that experience was for you.
Yeah, so I joined Peachscore, I guess, a little bit over a year ago. And as you know very well, Payman, I spent a lot of time one-on-one meetings with you,
Yeah.
going over back and forth on the pitch deck, refining it time and time again. And I just really appreciate kind of that conversation, be able to say, okay, yeah, like I hear what you're saying, but this honestly needs to be deleted. You need to retry. It's really good to hear feedback, even if you don't necessarily like the feedback. That's what you need to know. But then going beyond that, being able to access, Peachscore's, perks, we're able to leverage a lot of the different perks to save a lot of different money, signing up for several different subscriptions, getting access to the lead list to not only find potential investors, but also potential customers and partners.
I love it. Thank you so much. And the company name and website for everybody else that wants to save money on their taxes?
It's Code ROI. We essentially help any company that is developing software. We automate your tax incentives and get you some free money related to what you're already doing.
Amazing. Taylor, thank you so much. Congratulations on this award, the previous awards, and your raise. I really look forward to seeing how things progress for you through the rest of the year. Thank you again. Appreciate it.
Thank you,
Have a good
David.
one. All right, folks, let's continue on. And we're actually ahead of schedule, which I love. Okay, so let's go over here. And next, is our startup presentation. So we have 15 startups across 9 industries and 5 countries presenting today. Our first startup is Century Medical System. They are real-time detection with faster surgery and safer patients. That's what their goal is. They're a seed round company, MVP stage. They were founded in 2017, and they have a score of 684, a grade A- on our platform. I mentioned David Kersen earlier. He's just recently closed a 1.2 million seed round out of Santa Fe, United States. Dave, please.
Hi, everyone. I'm Dave Krasny, the founder of Century Medical. We're bringing a new level of sensory intelligence to the operating room so that no injury goes unnoticed. So we are addressing the most costly and catastrophic complication of minimally invasive abdominal surgery. We're doing it because we've developed a proprietary gas sensing technology that enables real-time detection and immediate intervention to prevent these catastrophic complications. Our approach is supported by clinical data from Stanford, and we've won multiple National Science Foundation awards of non-dilutive funding. And importantly, our technology integrates seamlessly into existing surgical workflows, positioning Century as a scalable standard of care solution. Minimally invasive surgery comes with blind spots. Surgeons can only see what's in front of the camera's lens. With limited tactile feedback, visualization is essentially the only sense available to them. When complications like the bowel injury shown here occur, they become increasingly costly and catastrophic for both patients and providers. At Century, we are adding a new sense to the operating room, providing real-time detection of bowel gas as it escapes into the abdominal cavity through a perforation. We've developed the system so that it imposes no changes to existing surgical routines, and it can be easily incorporated ultimately into existing platforms already in existence in every operating room around the world. The real challenge that we've solved is not necessarily just detecting gas, it's identifying specific GI gas signatures inside a complex surgical environment. Our technology isolates the specific fingerprints and signatures associated with those gases and reports on them in real time. Surgeons employ many different intraoperative monitoring tools and techniques across a variety of different specialties. Over time, these ultimately become standards of care, and PerfAlert is a natural continuation of this paradigm. In addition to 15 million laparoscopic procedures performed each year, postoperative diagnosis of anastomotic leaks represents an attractive secondary market for the company. And upon initial introduction, we'll employ a razor and blade revenue model, generating income both from a low-cost piece of capital equipment, but more importantly, from a disposable kit required for every surgical use, generating recurring revenue for the company. As surgery becomes more automated, the operating room loses some human senses. Century adds a new layer of awareness with real-time gas sensing, enabling safer and ultimately more autonomous surgery. The key here is that AI-driven surgery requires additional data for success. Century provides a brand new data set. Our team brings extensive experience in both startups and medical technologies. Alongside our cutting-edge expertise in gas sensor innovation, we've had success commercializing new products and realizing successful exits. And we're supported by a terrific group of scientific advisors who guide our strategy. And from the very beginning, our very first meeting at Stanford, Dr. Tom Crumwell likened our technology to the advent of pulse oximetry, which is now a ubiquitous monitoring tool. So as I mentioned, we've received multiple non-dilutive funding awards from highly selective institutions, and we have had a proof of principle study completed at Stanford, and the results were published in a prestigious journal. In addition, we have a strong intellectual property portfolio with patents issued in jurisdictions around the world. I'm pleased to report, as Payman mentioned, we just recently closed our $1.2 million seed round, and we're in process of getting a 50% match on that from the National Science Foundation of additional non-dilutive funding. So to sum up, we have a costly and catastrophic complication that's due to reliance on visual and tactile limitations. Century changes all that by introducing non-invasive intraoperative monitoring. We've demonstrated this capability through clinical and scientific validation, And importantly, we impose no alteration or change to existing surgical workflows. Finally, our technology can be easily integrated into existing OEM platforms. Since its advent, surgery has relied on what surgeons can see. Centauri adds an important new sense to the operating room. Thanks so much for your time.
All right, Dave, thank you so much. Congratulations again on the raise. Wish you much success. Looking forward to, how things go in 2026 for you. All right, let's continue on to our next presenter. And the next startup pitching for us is No Pause by Genevieve. No Pause is your menopause, your data, your power, a AI-driven menopause companion app. Pre-seed stage company at a public launch stage, founded back in 2025, with a score of 704, grade A-. Founder CEO Caroline McKinnon out of New York, presenting. Caroline.
Hi, everybody. I'm just going to share my screen here. One second.
Go for it.
Okay. So my name is Caroline McKinnon, and I built No Pause because at 49 years old, I suddenly felt disconnected from my own body. My shoulder hurt every morning, like randomly hurt. And it took 3 years, 4 doctors, and thousands in copay before somebody actually said to me, oh, this is called 40s shoulder, and you might be in menopause. So I couldn't find the support that I needed, so I built it. So 1.1 billion women globally are navigating menopause, and many of them experience more than 40 possible symptoms. Yet appointments with doctors are short. Symptoms are quite often misunderstood, and too many women are leaving feeling dismissed. Quite often they're being told to lose 10 pounds or try to de-stress. This is not a niche issue. Menopause is not just a health challenge, it's a major economic and workforce issue. Women spend thousands navigating fragmented solutions while symptoms drive lost productivity and workforce exits. No Pause brings clarity, support, and advocacy into one platform. Menopause affects every woman, and the system still isn't built for her. So No Pause by Genevieve is the intelligence layer for menopause care, clarity, and advocacy. It helps women to understand what their body is saying, identify patterns, and advocate for themselves. We turn the confusion of menopause into clarity. We take the symptom chaos into useful signals, and we help women to feel guided instead of alone. We're now live on the App Store and Google Play, with a major update to the AI layer coming in 2 weeks. Women can track symptoms, triggers, moods, cycles, and changes over time. Then Genevieve, who is the AI companion, analyzes those signals to surface patterns and insights that the user might miss themselves. It's not a generic wellness tracker. It's purpose-built for one of the most overlooked life stages in healthcare. I want to be clear that Genevieve is not a chatbot. A chatbot answers questions. Genevieve notices the patterns. A chatbot waits to be asked, whereas Genevieve proactively supports. And that matters when someone is exhausted, overwhelmed, or awake at 3 in the morning wondering what is happening to her body. From our early users, our most important feature is a health passport. So with one tap within the app, the users can generate a doctor-ready summary of what's actually been happening. It has symptoms, trends, severity, patterns, and questions that you can ask the doctor. Instead of trying to explain months of symptoms in 10 minutes, you can walk in prepared, and that changes the conversation. The menopause health market is already worth tens of billions globally. So we're beginning to look at the digital subscriptions in English-speaking markets where the need is high and access is immediate. So we're looking at a 0.6% market penetration, which would bring us to a 5-year target of around 26 million. This is a large market. It has been historically underserved, and employers are now starting to actively look for solutions. So it's not just consumers, which brings us to our business model. First, we're going to monetize in 2 ways. We're already direct to consumer with subscriptions at $8.99 per month. Secondly, we'll be looking at enterprise partnerships where employers support menopause well-being as a retention and productivity benefit. So the consumer will get us the speed and the first traction, and the enterprise will allow us to scale. Our path is about disciplined growth. First, we want to prove the retention. Then we want to use an efficient way of acquiring users. And then we want to expand our channels. We see a path to meaningful recurring revenue by combining consumer subscriptions with enterprise expansion. For us, the key metric isn't about vanity downloads. It's about trust-driven retention. We're approaching growth in stages. Launch with trust and community. And this is where we are now. We've converted our waitlist by 90% conversion, and we've seen early but highly engaged organic growth. Then we're looking to scale through paid acquisition and ambassadors, and then we'll expand through partnerships in HR and telehealth channels. We're still very early, but we're investing into the trust and the quality of the product. And we're built differently from the start. There are clinical providers, trackers, and content platforms in this space, but NoPause sits in a different position. We are the intelligent daily companion between appointments, and that relationship layer is where loyalty, data, and long-term value are created. We're about advocacy in this space. I've spent my year building mission-driven products in education, technology, and global impact. I've scaled organizations internationally and built products for underserved communities. And I've spent over 8 years already working in AI, and I built NoPause from a lived urgency. I've surrounded myself with a team of advisors and partners and contractors who are also living this experience. Now we're looking to raise 650,000 pre-seed. We want to accelerate the product development, growth, and early enterprise pilots. Over the next 18 months, we're intending to prove that we have retention, we can monetize this, and we have repeatable acquisition. But we also want to lead this category. We want to lead the advocacy lens. We believe that menopause will become one of the most important verticals in women's health within the next few years, and we intend to be there to lead it. So thank you to everybody for your time. My name is Caroline McKinnon, and we are NoPause by Genevieve, and I would love to connect with any of you. Thank you very much.
Thank you, Caroline. All right, our next startup is GetBob, helping business operators automate work and reclaim their time. Pre-seed stage company at a private launch, founded in 2026. GetBob has a leading score of 800 on the Peachscore platform with a grade of A+. Founder and CEO Michael Lindberg out of Austin, United States, presenting. Michael.
Thank you, Payman. I am going to start sharing my screen. I want you to think for a moment about the last time you tried creating an AI automation. Was it as easy as you expected? Did you finish the project in the time that you planned? And did you actually get something out of it? Was it what you hoped for? I bet you can't say yes to all these questions, maybe not even 2 of them. My name is Michael, and I am excited to introduce you to Bob, your new business operator buddy. If you're struggling to get actual value out of agentic AI, you are not alone. In fact, 9 out of 10 AI projects never deliver any business value. Setup is still too difficult. They don't really automate that much, and most agents are still highly specific, automating only a single task with no options for collaboration. This is not how real business works. You would never hire a brilliant sales executive and then lock them in a basement to do only one single thing. Humans are better when they collaborate, and so is AI. What if you had a platform where you could hire an AI for any job, and the AI actually did the entire job, not just a few workflows? What if these AIs were born collaborative, knew how to use each other, interacted with you just like humans do? And what if managing all this was as easy as just logging into your favorite social media? GetBob lets you delegate real jobs to AI that behaves like humans. Share any job description, and your Bob instantly starts executing every responsibility and deliverable in that job autonomously. And just like human colleagues, they loop you in for important decisions, but don't nag you constantly when they know the answer. You can build your own Bobs from scratch, or you can instantly hire tried and tested Bobs by other users in our Bob marketplace. Our approach to AI is radically different than our competitors because we are creating an ecosystem that enables AI agents to think and behave like humans rather than asking humans to think like AI. We win against our competitors because getting started with us takes mere seconds, and we become sticky because once our customers are onboarded, they immediately realize there's multitudes of Bob opportunities across every team in their business. Gergo and I founded GetBob because we've spent the past 2 decades struggling with fragmented tool stacks and unmet AI promises, and we desperately wanted something better. Our pricing is outcome-based and scales with the value we deliver back to our customers. We only charge for actual work completed, ensuring great alignment with our customers' growth. The majority of solutions in our TAM are built for technical roles and are single purpose only. We believe, as it was also talked about in the intro session today, that the winner of this race might be whoever creates the open claw for the rest of us, a truly autonomous agent ecosystem that lets anyone automate any job, regardless of technical background. Being bootstrapped, our marketing budget is practically nothing. So we're using our own Bobs to automate our entire marketing lifecycle with great traction. We're adding $3,000 of new ARR every week at this point, with a trial to paid conversion rate of over 70%, putting us on track to pass $100,000 ARR by end of 2026, completely on our own organic efforts. But we want to grow even faster. So we're raising $900,000 to speed up our traction. We will use the money to invest in faster lead acquisition while expanding our affiliate program and growing our ecosystem of Bobs and Bob creators. Ultimately, this sets us up on a path to delivering 80 million ARR in 2030 and achieving towards our mission of putting a Bob in every business so they too can experience just how easy business AI was always meant to be. Thank you for listening. I look forward to connecting.
Thank you, Michael. Appreciate it. All right, let's go to our next presenter. All right, our next startup is the Foundations Project, strengthening well-being through continuous learning and meaningful work. Pre-seed company at the MVP stage, founded in 2026, score of 657, grade minus. Founder and CEO, Bassie Parnell-Henderson out of Atlanta. Bassie.
Thanks, Simon. Let me share my screen. All right, so hi everyone. Thanks for being here. Thanks to the panelists and my fellow co-founders, and especially to Friedman and Alex for helping me through this journey quite a bit. So I am Bassie Hendrickson, but please call me Bassie. I'm the founder and CEO of the Foundations Project, and it's born of my dual background in education and career coaching, where I try to take a foundational approach to support the whole person in each of my clients, usually the professional and the parent. And in trying to do that, I've identified a persistent problem. So I don't know about you, but many of my clients and I, most of whom are working parents, talk about finding life impossible some days. We are balancing more than ever multiple jobs and caregiving, family, and health. And with all the life that's happening, we still want to learn. We find ourselves wanting to be the best parents and wanting to be our best selves, but kind of feeling like we're failing because learning structures just have not kept up with our very fast-paced lives. So this might show up like people like myself who have started courses that we never finished, get burnt out just by trying to find information about something, or have looked back as parents or business owners and said, I wish I would have known X, Y, and Z. So I find that the solution lies in merging learning with one of the tools that has made modern life more manageable, the calendar. I often say, if it's not on my calendar, it does not exist. So why not integrate holistic learning directly into our daily schedule? Structuring micro-learning courses as we structure our lives can give us clearer learning paths and bite-sized lessons that require less time and motivation. And with comprehensive courses, they support us with our professional and family-related learning. And to deliver this solution, our product EduCalendars allows users to select courses and receive daily learning bites throughout the calendar year. They are glanceable text, audio, or video lessons that are less than 60 seconds, and it becomes a daily habit where users can receive rotating reminders of their favorite content without all of the overwhelm. So we have an MVP in the hands of a few beta testers and have completed over 50 courses. And I thought it'd be cool today to also share a learning bite. So I have tons of calendars, and one of the main ones is our Radical Wellbeing Calendar. And today, or April, is the month of emotional regulation. So it says, create a regulation toolkit. Build a personal list of healthy regulation strategies that work for you. It could be a short walk. It could be listening to a specific song or calling a friend or stretching for 5 minutes. This list handy for when you need it most. So that actually will help me today as I go through this very kind of nervously exciting experience. And we want to share that our product aligns with the edtech market, which is both globally and in the US and Canada quite large and growing. We plan to focus on obtaining a small percentage of our SAM and still grow to over 63 million in 5 years. Now, our business model is primarily a B2C freemium subscription with plus and premium tiers, each with increasing value, and in addition to future monetization opportunities and brand partnerships with corporate licensing. With this model, following an official January 2027 launch, we project steady growth in active users with 7% paid conversion and additional monetization. We're looking to reach 38 million in annual revenue by year 5 with lean spend and a gross margin at 55% or higher. These are conservative estimates as we plan to start with a hyper focus on millennial parents to fuel organic growth in online communities and boards, later expanding our content and user base through partnerships across influencers and podcasters and publishers, as well as paid social media ads before reaching for B2B and global opportunities. Now, when taking competitors into consideration, I personally use most of them, and EduCalendar stands out because with courses that are comprehensive and built for calendar integration, it becomes a daily habit that's hassle-free. Lessons take less than 60 seconds, which is about all that parents have, if that. And rather than taking hours and 15 minutes, it's a lot more manageable. And unlike niche competitor apps, we provide parents with all the familial and professional and personal growth topics they need in one centralized place. So it's currently a team of 1 here at the Foundations Project with a background in education and consulting and communications. I run the Foundations Project as a small business for several years with the support of contractors and my network. However, I do hope to build a larger internal team, which leads me to my ask. So to pour into our new product, I'm seeking 145,000 in pre-seed funding for a 14-month runway. With a focus on lean engineering, marketing, and operations, we look to capture about 50,000 active users and double the investment by 1 year after launch while continuing to grow. So with your help, I'm really excited to guide millions like myself from overwhelmed to more effective learning 1 calendar day at a time. So I invite your questions and support. Feel free to reach out to me on LinkedIn. I have a very unique name, so I'm easy to find, and I appreciate your time. And thank you very much.
Thank you, Bessie. Appreciate it. All right, let's go on to our next startup. Our next startup is YourCash. YourCash is a consumer's platform to spend wisely, save instantly, and invest seamlessly. Pre-seed company, private launch stage. Founded in 2024 with a score of 688, a grade B+. Tala Al-Harabi, founder and CEO out of Riyadh, Saudi Arabia, presenting. Tala.
Thank you, Bayman. Let me share my screen. Hello, everyone. I am Tala Al-Harabi, founder and CEO of YourCash, an AI personal finance platform for unifying fragmented accounts, cards, and rewards into one actionable view. My brother Sultan was working hard, earning a salary and trying to build a future. But every month, the money disappeared, not because he had no income, but because his financial life was scattered across accounts, cards, apps, and rewards. He could not see the full picture, so he could not make the right decisions. And the hard truth is, Sultan is not the exception. Sultan is the pattern. Sultan and other people do not need more financial products. They need one intelligent layer to make sense of the ones they already have. They need unifying fragmented accounts and guidance towards better financial decisions over time through AI-powered recommendations. That is what we are building. Your Cash unifies accounts, cards, and rewards into one actionable view. And we already connected 11 banks. Then it uses AI to detect pattern, highlight risks, and guide for better financial decisions. Our products are staged, unifying financial views now, AI guidance later, and partner-enabled wealth actions later, including payment optimization and save to invest flows. The market is tremendous, but our strategy is focused. We see a $200 billion global opportunity and a $225 million market. Saudi is our first region with over 22,000 signups, and MENA is the expansion path. The business model starts with freemium adoption up to 3 bank connections. Then we monetize through premium subscription from $9 to $50 a month. Software revenue comes first. Broader financial monetization comes next. Our financial is assumption-based. If we successfully close our pre-seed round, we are expecting to generate $250,000 by end of this year. And by 2030, your cash reaches $42 million in revenue. The focus is simple: convert demand, retain users, and scale after product market fit. Our strategy is launching from visibility, behavior to action, and building the acquisition engine to help us scale. What makes your cash different is not aggregation alone, but banks are fragmented. Local alternatives solve pieces of the problem. Global tools are not built for Saudi behavior. Your cash is built around one unified financial layer, AI guidance, and an open ecosystem for future wealth actions. The team is founder-led with company building, regulated security, and operation experience. I bring 3-time founder experience. Ahmed brings secure systems experience in regulated environments. Iman brings operational leadership from a 50-employee organization. We are building the leadership bench as we scale. Even pre-launch, we have real signals. We have over 22,000 on the wait list, received over $100,000 in cash and $1.3 million in line of credits from grants and startup backend programs. That proves demand, infrastructure progress, and external validation. Because this is a Saudi fintech, trust is not a feature, it is the foundation. We are building with KSA cloud infrastructure, compliance documentations, and licensed partners. That lowers execution risks while building long-term trust. We are raising $1 million through a pre-seed safe at a $10 million post-money cap, targeting 15 to 18 months of runway. This capital helps us launch the first Saudi AI product, convert waitlist users, and advance our next round readiness. Sultan's problem is personal to me, but it is massively scalable. Millions are earning, spending, and planning their for your future without one intelligent system. Your cash is building that system, starting in Saudi, powered by AI, and designed for trust, scale, and smarter financial lives. Thank you for your time, and I'd love to hear back from you.
All right. Thank you, Talal. Appreciate it. Let's go on to our next presenter. Our next startup is CleanRide, the easiest way to book a full-service car wash. Pre-seed stage company at the public launch product stage, founded in 2025 with a score of 625, grade A-. Founder and CPO Simeon Ononobi out of Louisville, United States. Simeon.
Good afternoon, everyone. My name is Simeon Ononobi, and I'm the founder at CleanRide. Now, I can ask everybody a question here. When last did you visit a car wash and you had to wait 45 minutes to 2 hours for your car to be washed, losing time, getting discomforted, and having a very bad experience? That is the real story behind full service car washes. Today, a customer walks into a car wash, he doesn't know whether there's a wait time, there's no reservation system, it's unpredictable, and you get to lose time and money And on the flip side, the operator also has a lot of problems because they don't know, who's coming in on which day, what time of the day to staff more or to staff less, and it's a real chaos in the industry. I know this firsthand because I own a car wash and I lived this experience for over a year. Now, the solution for us is to create a reduced waste time, which is creating a reservation system which is not present in the industry today, where a customer can go book a car wash, and on the flip side, telling operators how many cars are going to come in, how to staff, and make predictably data-driven decisions. And that comes CleanRide, which is our solution. CleanRide is a reservation and operations platform that helps customers save time and enjoy a better car wash experience, where you go on an app, you book a car wash, depending on which car wash you operate with. And on the flip side, the car wash is prepared to receive you at the location. Today in our world, you can book a haircut, you can book a restaurant table, but you can't book a car wash. And that is what we're trying to solve for. The opportunity is huge. Over 60,000 car washes in the industry today experience the same thing, which accounts for about $18 billion in transaction flow. We're focused majorly on that family-owned single car wash experiences, and that would give us a sum of about $500 million. Our business model is very simple. Basically, what we do is we take a transaction fee, a 5% transaction fee off every booking, and also we charge a subscription fee to the car wash owners to be able to use our expansive operational platform that helps them predict the number of customers that are going to come in, help them staff better, and reduce the chaos that comes with the car wash industry. Currently, our financial projection gives us starts from about $760,000 ARR to about $45 million in 5 years. And this is very achievable because at only 100 locations, we're going to hit 760. Our go-to-market strategy is very simple. My background is tech, and also I own a car wash. So I've lived it. Before I bought the car wash, we were doing about $460,000 a year. Just last year alone, we did over $800,000 implementing CleanRide. And that's why I decided to open CleanRide to the entire industry. So I'm going to be going to car washes, and we're starting from the DFW Dallas area where I operate from, and they're going across the industry. We do have competition. There's Google, which is where people find car washes today, but there's no booking experience. So you still have to go into a car wash and have a very poor experience. And that's where CleanRide comes in. We combine all the issues and create an operational efficiency for the car wash owners. I'm a previous founder with an exit, and also I operate in this industry, so I live it every single day. And I am trying to go across this industry with valid advisors from Andrew Dell and Maduna Anobi. And also, I've been able to get a patent, a provisional patent for this platform because nothing like this exists in the industry. So I want to revolutionize this industry. Currently, we're at about $72,000. We're only 3 months in the market. We also integrated AI into our system that helps the car wash owner predict everything that happens. All I do every day is receive an email from Simi.ai, from the CleanRide platform, telling me exactly how many people to staff, what transactions I'm going to be expecting today, and that way I can plan myself better. We started with just three car washes. We have 78 car washes already on our waiting list in DFW area, and we're going to expand to over 60,000. So that's why I'm here today. We're raising $750,000 to be able to expand at an aggressive rate because we've proven that it works. $72,000 in ARR shows that there's demand for this, but we're only at 3 locations. We're expanding as we go, but to make us go faster, we need these funds, and we'll be able to reach at least 100 car washes with a $1 million ARR projection. We've proven the market. I am an operator. I understand the market very, very well. I have lived it over a year. I've been able to prove from $460,000 to $800,000 in revenue, and we can do this across the industry. So if you want to talk to me, I'm happy to connect with you. Thank you very much.
Thank you. Appreciate it. Okay, let's go to our next startup. Our next company is Accelerator. Your first line of defense against cyber threats. Pre-seed stage company at the MVP product stage, founded in 2025 with a score of 591, grade A-. Will Everstein, founder and CEO out of Deming, United States. Will, please.
Thank you, Payman. My name is Will Evertson, founder and CEO of Centurious 360. We are a HIPAA compliance and cybersecurity platform designed specifically for small and mid-sized healthcare organizations. Here's the problem. Here's the reality facing healthcare SMBs right now. In 2024, 185 million patient records were breached. The cost per compromised record now exceeds $400, and a single breach averages $400,000 in penalties and related costs. And yet 90% of healthcare SMBs have no dedicated IT or compliance staff. They're running on manual checklists, spreadsheets, and the hope that they don't get audited. This is a full-blown compliance crisis, and it's going completely unaddressed. That's exactly the problem Centurious 360 was built to solve. One platform that delivers real-time technical monitoring, automated compliance evidence, breach cost reduction, and audit readiness. And for organizations that don't want to manage any of it themselves, we serve as their fully outsourced compliance department. Centurious 360 is fully built and in production. The platform unifies compliance and security operations in a single interface. Risk assessments are streamlined, technical safeguards are monitored continuously, and the entire experience is built for non-technical administrators. The TAM for healthcare cybersecurity and compliance in the US is $15 billion annually, growing at 17.5% through 2030. Our SAM is $11 billion, focused on the 700,000 non-private equity physician-owned entities. Our SOM is 35,000 organizations with under 100 employees and under 200 endpoints, representing $900 million in addressable recurring revenue. Our average customer generates approximately $26,000 in ARR, and our 5-year aggregate revenue target against that market is $30 million. We operate on annual contracts across 3 service tiers. Self-service at $1,365 a month for organizations managing compliance in-house. Managed compliance at $3,000, where we serve as the customer's outsourced privacy and security officer of record. And enterprise at $6,500 for larger, more complex organizations. Blended ARPU is approximately $2,200 a month. Compliance obligations drive retention, and the tier structure creates a natural upgrade path. We project $125,000 in revenue for our partial launch year in 2026, representing June through December. In 2027, our first full operating year, we project $1.75 million across 110 active subscriptions, driven by a fully ramped sales team, initial MSP partner activations, and retained launch customers compounding into year 2 revenue. We reach $14 million by 2030 across approximately 560 subscriptions. We go to market across 6 channels: BDR-led direct outreach via LinkedIn and email, a charter customer program targeting our first 10 paying customers with priority onboarding, thought leadership content distributed by RX Network to over 850,000 healthcare readers monthly, MSP and GPO partnerships that give us leveraged access to the SMB healthcare market, and a compliance consultant referral network. Our competitors fall into 2 camps. Compliance-only platforms like Compliancy Group, HIPAA and Total HIPAA handle documentation workflows but have no technical monitoring layer. HIPAA Secure Now has technical tools but limited compliance depth. Centurious 360 is the only platform that combines full HIPAA compliance depth with continuous monitoring of technical safeguards, and the only one that offers fully outsourced compliance management as a service layer on top. I'm a certified HIPAA privacy and security expert and a certified HIPAA professional. I directly reduced client HIPAA risk findings by 65% through hands-on remediation work. I built this platform because I lived this problem firsthand with every healthcare client I had. Jerry Koloski, our senior strategic advisor, brings leadership experience from 3M HIS, Panasonic, and WebMD. He joined as our first strategic advisor in June 2023. On the validation side, 12 customer discovery interviews conducted across physicians, administrators, and business associates, a referenceable consultant client, and a platform that's been production stable since January 2026. We're raising $350,000 in a pre-seed round via SAFE with a 16-month runway target. Fund allocation is 40% to marketing and sales, 30% to product enhancement, 25% to operations, and 5% to reserve. This round funds 3 milestones: charter customer onboarding in late Q2, commercial VUMA launch by early Q3, and initial ARR validation by Q4 2026. Healthcare SMBs are the most exposed and least protected segment in this market. Centurious 360 is built to change that, and we're ready to scale. I'm Will Evertson. Thank you for your time.
Thank you, Will.
Thank you.
Okay, let's go to our next startup. Our next presenter is Crave Society, a dining decision engine matching cravings to the right restaurant experience. Pre-seed stage company, pre-revenue product stage, founded in 2023 with a score of 588. Alessandro Barbarota. Sorry, Alessandro. I've had a hard time always saying your name. I don't know why. Co-founder and CEO out of Hillsdale, United States. Tell us your full name, please.
Alessandro Barbarota, but I've heard worse, so you're
No,
fine.
I don't know why. In fact, I looked at it right before. I'm like, yeah, I can say that. I don't know why. Tongue twister. Anyhow, go for it.
You're not supposed to be the nervous one here. I'm supposed to be the nervous
I'm
one
not nervous. I don't know why my tongue did that. Maybe not enough coffee, but go for it.
here.
Thanks.
No worries. Can you see that?
I can. Go ahead, please.
Thank you. Hello, my name is Alessandro Barbarota. I'm the co-founder and CEO of Crave Society. As Chicago food insiders with deep restaurant experience, my co-founder and I built Crave Society to solve the problems we faced. If you ever searched Yelp or Google and still didn't know where to eat, you're not alone. Those platforms optimize for clicks, not fit. They solve listings, not decisions. As a result, cravings become guesswork, people just settle, and loyalty never really forms. In Chicago alone, there's over 10,000 restaurants, yet most of those never make it to your search results. 90% of people search online before going out to eat, yet 70% of those people disappear after the first visit. Crave Society is a mobile app that knows each user and each restaurant on a deep level in order to match every craving to the right dining experience. That gives our users confident choices and authentic visibility. Our platform is designed to convert that 70% drop off into repeat visits and repeat revenue for our restaurants. Crave Society is the decision engine for dining, built to turn uncertainty into confident choices and to surprise and delight our users. We wanted to really create a platform where a person can quickly understand the value and nuances of a restaurant as if they were a regular that's been going there for years before they ever step foot into the restaurant. We make everything worth knowing about the restaurant searchable. We learn your tastes and intentions. We showcase restaurants in a way that motivates exploration and understanding, and we unlock repeat visits through tailored incentives. The global dining decision economy is a $300 billion per year market, growing 8% annually. The top 50 dining cities globally represent a $100 billion per year market opportunity, and between Chicago and the top 20 US dining cities, that's a $2 billion per year market opportunity. We project our 5-year aggregate revenue to be $34 million. Our business model is founded on 3 main pillars: brand ads, reservations and credits, and premium user memberships. Brand ads are ads that are not from restaurants. They're from brands like consumer brands, lifestyle brands. You could think of boutique hotels, wine and spirit industry, fashion brands, but they don't look and feel like brands inside the app. They look and feel like showcases, just like our restaurants. We earn a small reservation fee, $1 per booking that goes through our system, and our premium users pay us between $100 and $150 per year for that membership to take advantage of our incentives and member benefits. Now, restaurants gift us restaurant credits as we pull our users through this 3-visit framework to get to that gold standard 3rd visit, because we understand the data shows that if a person goes to a restaurant 3 times and has a great experience, the statistical likelihood of them becoming a repeat customer jumps up to over 70%. We then take those restaurant credits and gift it back to our premium users as additional incentives for them to maintain their membership with us. Over the next 6 months, we'll complete product development, AI integration, and secure patent pending status. We'll seed the Chicago market and begin generating revenue in early 2027. With our freemium model and targeted content, we project to gain 20,000 users, converting 5% into 1,000 paying users and 10 ad partners by the end of 2027. In 2028 and 2029, we'll expand into new markets and accelerate growth through optimized acquisition channels, network effects, and economies of scale. In terms of our acquisition flywheel, we're going to leverage paid digital ads, influencer partnerships, targeted social media content, and restaurant contact lists, along with city and travel partnerships. Our competitors help you browse, but we help you choose. And no competitor guides the diner from craving to discovery to decision and through loyalty. What sets us apart really are our key features that crave matching, the personalized guidance, the insight profiles, our vetted quality restaurants. We don't showcase every restaurant, we showcase the ones that are worth your time and attention, our 3-visit loyalty engine, and our real rewards. That's our team. That's me, Alessandro Barbarotta. I'm a 2 times founder. I've generated over $100 million in revenue for Fortune 500 brands and SMBs. Silvano Sintech, our co-founder, he's a 40-year owner-operator and serial entrepreneur. And our development partner is an award-winning development firm with 26 years of experience called Caxi Interactive, based out of Chicago. We're raising $500,000 pre-seed via SAFE at a $2.5 million post-money cap for 18 months of runway. With that money, we're going to complete product development, integrate AI, secure patent pending status, and seed the Chicago market to generate 3,000 paid users, 15 ad partners, and that will result in $750,000 in revenue. And that's Crave Society. We're redefining how the world decides where to eat. We thank you for your time and look forward to answering any questions you have. Thank you.
Thank you, Mr. Barbarotta. See? Thanks, Alessandro. Have a good one, buddy. All right, let me go to our next startup here. Okay, the next company is Thinky. Train your brain at any age. Seed stage company at post-revenue product stage, founded in 2023 with a score of 757, grade A. Nicholas White, co-founder and CEO out of Bellevue, United States.
Hi, this is Nick from Thinky, and we're in the business of fostering neurological longevity. What does that mean? We've built a step counter for your brain. It's a device that you wear on your forehead and measures the blood flow to your prefrontal cortex. That's a little complicated, but first let me tell you a little bit about the problem that we're solving. The prefrontal cortex is the part of the brain that determines whether you will develop dementia or Alzheimer's later in life. That starts out as mild cognitive impairment. Usually those are symptoms noticed by a lack of memory. Thinking speed has been impacted, as well as decision making is affected. This usually occurs in adults age 35 and above, but oftentimes isn't noticed for decades. Luckily, Dr. Kawashima of Japan, who is our technical advisor, has conducted 40 years of research that shows that proper cognitive intervention can not only arrest but also reverse the decline in the prefrontal cortex. This is proven out by his tests in both children as well as adults of various different ages. But it requires both stimulus and feedback, in the same way that when you exercise, it requires stimulus and feedback. The difference is that when you exercise your body immediately tells you that it's exerting itself. When you exercise your brain, it's impossible to distinguish between the value of one exercise or another without a sensor like Thinky. So we built this step counter for your brain as a scientific way to improve your cognition. The feedback mechanism is the thing that makes it different, the sensor that you wear on your forehead. You only have to use Thinky for about an hour a week. That's 15 minutes a day, 3 to 4 times a week. And this has been proven to lower the brain age of people who use it consistently for that period of time. 3 months, you can bring your brain age down by almost 4 years. This has been proven in randomized controlled trials across France, Japan, and the United States. It's a huge market opportunity that we're looking at. Just in North America alone, it's a $5 billion opportunity, growing at 20% a year. So that means that in 10 years, it's going to be a $16 billion business. This is for active seniors as well as biohackers, people who are 55 years and above in the former case, and those who are 35 to 55 years of age and are looking for peak performance. We sell directly to consumers through our website and Amazon. $2.99 is the sensor cost. That's one time, and then there's a monthly subscription that goes along with that. The sensor margin is about 50%, which at volume we can bring down to better than 30%, by 30%. So we can bring that down to about 70%. One thing I should state is that caregivers of cognitive patients have the most burning need for a product like Thinky. They're at 6 times greater risk of developing mild cognitive impairment, as based on findings by the Alzheimer's Association. We've had tremendous traction thus far. We've sold over 500 units, almost 1,000 downloads, and our best users use Thinky for 3 hours a month. We were brought to the Consumer Electronics Show earlier this year, as well as the Brain Health Symposium prior to the Super Bowl, both on AARP's dime. We also participate in Samsung Health and Panasonic Well SDKs to integrate with their ecosystems. In 5 years, we'll have $20 billion in recurring $20 million in recurring revenue, and should be valued at $100 to $150 million. That's going to entail about 63,000 device sales between then and now. Our go-to-market includes advertising with AARP and social media, organic and referral based. Our customers are our best sources for new growth, as well as affiliate programs that we're participating in across social media. The competitive landscape, what cuts us apart from Lumosity and Mendy is that we have a sensor and we're focused on cognitive training. Lumosity does not have a sensor, so it cannot give you objective feedback. Despite that, they have 75 million users who've downloaded their product. Mendy has a sensor, but they're focused on sleep hygiene, not the same use case. Our leadership team, really important, is Dr. Kawashima. It's his research that we base both our hardware and our software on. The software that he designed sold 36 million copies on the Nintendo platform. The hardware has 30 years of R&D behind it, supported by Hitachi and Mitsui. We're looking for a 10x multiple in 5 years, most likely by one of the pharmaceutical companies that have approached us looking for access to our data, or one of the health platforms mentioned previously. So to get to our first 3,000 customers, we're looking for $1 million note at a 25% discount and a $4 million post-money cap. Thank you for your time, and I appreciate it.
All right, thank you, Nick. Our next presenter is Arcel AI, Palantir for engineering context layer and data agent infrastructure for AI native health, science, and deep tech system. Pre-seed stage company at the MVP product stage, founded in 2025. The score 751, grade A minus. Founder and CEO Alejandro out of San Francisco, United States.
Hey, I'm Alex. I'm the founder and CEO of Arcel. We're building an AI data scientist for high-stakes science and engineering domains. What we're seeing is that progress in the world of bits, of atoms, is slowed to a halt compared to the world of bits. Science and engineering work is fragmented, it's expensive, and when you try to deploy AI to solve problems here, 90% of it fails due to lack of reliability and trust. Over $250 billion in biotech and life sciences alone are being lost to this drag, and the infrastructure is costing 80% of the time for engineers and other developers to data preparation due to messy, unstructured, and disconnected data systems. So the solution to this is an AI that integrates data, automates workflows, and produces reliable and traceable outputs, built-in traceability, lineage, and validation, unified infrastructure and workflows, and an automated data layer to take care of that messy 80%. And that's what we're building, an AI data scientist that connects data, runs workflows, and delivers trusted results for AI scientists, systems, biomanufacturing, clinical, and many other exciting areas. We are, for example, deploying in clinical with already some preliminary interest from Kaiser Permanente. And the key there is precisely systems like this: end-to-end lineage graph and deterministic audit trail. Every recommendation is traceable, reproducible, and grounded in structured context. That cannot be said about ChatGPT, Claude, even their healthcare versions, and even Copilot apps out there for any of the domains that I talked about, including clinical, which is the example here. And the key drivers for clinicians or researchers are upfront, full reasoning, traced reasoning, available on demand. We estimate about $2.1 billion in early adopters, which we'll get into. and think we can capture about $4 million of dollars from an obtainable market of 65 million in the first 2 years. 65 million coming from capturing 10 to 20% of the early adopter market, and a $300,000 estimate in annual contract value. Again, we can capture roughly 4 million in the first 2 years following the raise, and cross the $150 million ARR threshold by 2032 with profitability in the first 3 to 5 years. And we're working on the first set of initial pilots that we can convert into enterprise, those multi-$100,000 enterprise contracts, and are getting insane inbound because of our publications at top AI conferences on which we've built our systems. We're looking at a phased market expansion where our first horizon involves applying to virtual cells. Again, it involves applying to clinical, taking on the inferential gap in precision medicine essential for women's health, pediatrics through Growth Guard, and we have commitments for proof of concepts in drug discovery, biosensors, and related areas. And when it comes to co-pilots across all of these and the LLM apps, again, we win with unified real-time context, traceability, and reproducibility. And that is essential for any of these high-stakes domains. I'm building this off of research that I did in biomedical AI at Harvard Medical School. I graduated with an undergraduate degree in computer science from MIT. I spent all of last year building this, talking to customers and working with many people at a deep tech research incubator in San Francisco. And we did achieve significant traction there and have since. We have a committed pre-seed. We have 4 paid POC commitments totaling over $200,000 in ARR value waiting to be unlocked. We have 9 companies on the wait list. We have a team that is explosively growing, lots of demand, more than we can possibly accommodate right now. And we're looking to raise a pre-seed of $1 million open to oversubscription to generate $1.3 million in total revenue after the first 15 months. We have 550,000 in lead list commitments and are looking for that lead or for people to help round out that $1 million target. Join me in building this AI data scientist that will unlock massive progress, help cure diseases, help accelerate manufacturing and bring manufacturing back to the country, and do many, many other great things. Thank you.
Okay, our next presenter is Pulsar Health Data Agency, empowering consumers with a patent-pending app to own, control, and monetize their health data. My data, my health, govern what's mine. Okay, pre-seed stage company, MVP product stage, founded last year with a score of 559. Dr. Doreen, founder and CEO out of Woodlands, United States, presenting.
Once upon a time, patients trusted healthcare organizations to manage their medical records safely. I am Doreen Rosenstrach, sharing my story with you that's personal to me as a clinician and individual that affects millions of us. Let me ask you, do you know where your complete medical records are, and could you access all of your data right now? Every day, lack of complete data access affects 20 million of Americans, resulting in costly redundant tests, gaps in care and medical errors, leading to medical debt of over $220 billion. 65% of physicians complain about fragmented health data, and 77% of life sciences technology researchers identified high-quality, clean datasets as the essential linchpin for maintaining competitiveness and accelerating clinical trials. One day, patients take back control with our Health Data Agency, an all-in-one smartphone app. Imagine a world where you control your data, benefiting and earning money from it. That is Halsa's vision, a health data agency empowering consumers to 100% own, secure, and monetize their data. While physicians get access to complete patient records, reducing costs and medical errors, researchers will finally have real-time access to high-quality, ethically sourced data. Here's how it works. Download the app and give consent. Our patent-pending AI technology handles anonymization and tokenization for privacy and monetization, plus unlearning. Patients securely aggregate records, share, or revoke data while retaining true ownership. Physicians receive instant and free access to complete medical records. Researchers and pharma purchase HIPAA-compliant, high-quality data featuring AI-driven tokenization and unlearning for regulatory-grade model training. The global health data market hits $8 billion, growing 17% yearly. Halsa grabs 1.3% share in 5 to 7 years. Halsa unlocks value ethically, the patient-generated data market heading to $33 billion by 2034. So how does Halsa make money? We offer tiered subscriptions to consumers, while enterprises access data through billable custom solutions. Halsa's marketplace charges a 20% commission on user-approved encrypted data sales. We project to be cash flow positive by year 2, reach $18 million in revenue by year 3, and $31 million by year 5. Our phased go-to-market strategy begins with digital health communities, then partnering with providers and researchers. Digital marketing and referrals will drive growth, followed by global expansion North America first, then worldwide. While there are other players in the health data space, Halsa stands out because users have true ownership and control of their data. Our comprehensive monetization platform allows consumers to financially benefit and at the same time leverage data for their own health. To this day, this has never been available to consumers. In contrast, competitors keep data locked at the institutional or provider level. Halsa is the only app that gives users full ownership and a monetization option of their data. We've got solid early traction. Filed a patent for intellectual property, formed a C corporation in Delaware, raised $10,000, the MVP is being built, proof of concept is ready to view, and 50 user surveys so far are validating demand with wanting to be beta testers. This multidisciplinary team is collaborating for years, resulting in our recent publication on health data management in Cognitive World, a global AI think tank. Our team combines decades of expertise in software engineering, healthcare, law, cybersecurity, finance, and data management. We have the passion, skills, and experience to bring Halsa's vision to life. We're raising $150,000 pre-seed via a simple agreement for future equity at a $4 million valuation cap, 20% discount, 5% interest. Join the revolution of health data management with Halsa, empowering individuals to truly own their health data while providing unparalleled value to researchers, pharma, and physicians. This is the future of the $33 billion patient-generated health data ecosystem, a win-win for everyone.
Okay, our next startup is InteractMet, an AI-driven real-time voice translation platform that eradicates language, cultural, and sensory barriers. Pre-seed stage company, public launch, founded in 2024 with a score of 622. Ziran Wu, founder and CEO out of Oakville, Canada.
Hello, everyone. Welcome to InteractMet. I'm a founder and CEO of Ziran Wu. We are doing real-time video call translation platform. Our mission is break down the language barrier across the border. So right now, global organizations struggle when participation don't share common language. They will feel like misunderstanding, delayed, and slow decision making. So most of the people love to trust same language meaning and most confident. As they always hire high cost translator when they're in a meeting, different language meeting, and hard to schedule with the translator as well. So our solution is help people to break down language barrier speech-to-speech translation platform in natural meeting flow, and also we need to promise the higher stakeholder alignment for multilingual language, improving clarity, buy-in, and cross-function execution. And we also make a cost optimizations in interpreters, free scaling, low language costs, and maintain quality. This is our platform. We are to be enterprise in 106 language support in 2 to 3 second latency. We also support 1 season 100 participation plus. And also we have AI integration for different apps can use our platform as well. So our marketing opportunities is 1.1 billion TAM in total addressable market. In the globally, we only focus on North America and England and British and Europe. And it will focus on cross-border teams, university, ESL and programs, and multilingual to be customers. As I can see that 10 to 12% of ours target on North America is 20 million in early years. So business model is 0.1 USD individual per minute. If you want to buy 1,500 minutes to be, you will pay us 0.08 USD dollar per minute. Over 1,500 minutes, we will pay 0.07 USD per minute. So API only for 0.07 per minute, and we are maintaining is $300. So financial forecast is from 200 million raised by 2030. We are very conservative. So revenue is 350K to 20.6K millions, and we will have 415 to 5,000 from 2026 to 2030. We have 15 customers from 2026 to 2030 until 1,100. As you can see that when the variable cost is going down, the customers will going up. And this is our validation stage, and we are already promote for 5 to 6 weeks and we are in validation stage. We stop promoting because we need to fix something until we go to stage 2. So this is our fixing. So for validation, people get per validation stage, we are promote for 1 month free. And we're asking for different people to feedback and trying to fix our onboarding, and we just finished fix onboarding and fix some optimizations. So we're going to filter for Google searching engines, and also we're going to do X and TikTok Meta. We figure out that TikTok and Meta is most people love to subscribe from, so we mainly focus on TikTok and Meta. So right now we have 900 customer over in the test user level from validation test. So right now we will compare with marketing right now. So we have silent translation, interview training, real-time translation summarize, and later we have voice column from later March on early April, and we will different from this feature. This is our team. You can look it by yourself later. And we're asking for 500K per save. We break down for operation 20%, product and engineering is 50%, and marketing is 30%. Thank you very much.
Okay, our next presenter is CallSecure, scam-free federated business client communication platform, pre-seed stage company, private launch product stage, founded in 2022 with a score of 610, grade A-. Ali Al-Tabar, founder and CEO out of Brickdale, Australia.
Hi, my name is Ali Agatabar, the founder and CEO of CallSecure. Communications between insurance companies and their clients is often insecure and inefficient. Insecurity arises from the absence of a trusted industry framework and the methods by which information is exchanged. inefficiency caused by use of traditional communication channels and call handling procedures, 60 billion annual scam cost, and 56% frustrated client rate is the problem. The solution is to transform traditional communications to digital format that offers built-in industry-grade trust framework, security, and efficiency. Scamming must be prevented at the start, and clients to be efficiently routed to appropriate resources without call queues. CallSecure is a modern app that makes communication between insurances and the client seamless. It eliminates scamming of the communications, brings efficiency by automated communication routing, enables parties to manage and share information securely, enables insurances to retain data ownership, and consolidates all insurances into one app. With 1 million enterprise businesses, our TAM is 335 billion, where 60,000 are insurances, equivalent to 20 billion SAM. Our focus is APAC and mainly the 185 Australian insurance companies, which makes 55 million SAM. And in the first 5 years, our aggregated revenue is 48 million. The B2B business model is based on annual subscriptions, with pricing packages are ranging from 25,000 to 750,000 depending on options selected. And this is our financial projection, including 20% change rate. The bars are the estimated customers and the line is the estimated revenue. Our great go-to-market strategy starts with pre-launch and free rewards to early bird clients. We do that by digital advertising. Then we use direct marketing and rewards program during launch period. We will also scale with partnership program. Our enterprise competitors like Google and WhatsApp are lacking scam prevention, call routing, and data ownership delegation. And the smaller ones are focused on caller ID service only, and they do not provide any communication solutions for insurance businesses. I'm Ali Agatabar, the founder and CEO with many years of experience with enterprise businesses. Yazim Shalatem, the co-founder and CTO, comes with great security architecture, application development, and team management background. We are also supported by Nidal and Phil as our advisors. We are seeking 425,000 pre-seed through SAFE or convertible note with 14 months runway with 2 customers at the end. The post-money valuation is estimated 5.5 million. Please reach out for more information. Thank you so much.
Righty. Our next presenter is, there we go, Musha, real estate marketplace for fractional investments, pre-seed stage company, post-revenue product stage, founded in 2023 with a score of 662, grade A-. Chuka Okike, co-founder, CEO, and CGO out of Enugu, Nigeria.
Hello, this is Musha, a fractionalized real estate investment platform for property developers, owners, investors in West Africa. The problem are high entry costs and solo sales and poor liquidity, which makes real estate investment difficult for average earners and risky for developers in West Africa. There are high capital losses of up to 10 billion a year, slow sales of average of 6 months to 1 year, accessibility is limited, and liquidity and flexibility is also restricted. The solution, a product that unlocks affordability, liquidity, and efficiency in real estate for 30 million plus investors or average earners in the continent. These products should be able to reduce annual losses from about by about 20%, faster sales of increased by 50%, and the increased accessibility and also flexible investment and liquidity options. The product, Musha, Africa's first professionalized real estate investment marketplace, where developers and owners can sell faster. There's real-time tracking of property growth and progress, smaller investment thresholds, and secure marketplace for remote ownership, and easy exists. The market opportunity has a TAM of $15 billion, which is about 10% of value of real estate sector in West Africa. The SAM of 6.25 billion and a sum of about 1.35 billion, which is about capturing 9% of the TAM. The sector also has an 11.2 CAGR, and our business model is a B2B2C fractional real estate marketplace targeting average income investors and developers alike. We have two models, which is a freemium model where you get access to free accounts, property and project access to fast trading, and AI-powered investment advisor. While our paid model shows we get about 9% of every property traded on the platform, 5% of the monthly or yearly transactional, yearly rental transactions, and then 3% of managed property resales. Our revenue forecast shows by 2031 we should hit about $11 million, and in 2026 we just need about 180 paying users, spending about $300 to hit our 54K target. Currently, the average investment on the platform is about $400 to $450. Our go-to-market strategy are young professionals, the African diaspora, and the real estate developers and property owners in Africa. Our acquisition channels have been digital marketing partnerships, community engagements, and offline activators, which we have done around a couple of shows in 2025 and done a couple of expos also, which are available online. The competitive landscape shows Musha shows traditional real estate companies, Sujimoto, which does real estate, Property Pro NG, which is a traditional marketplace for properties, Rent Small and Split, which are startups, prop-tech startups that help individuals rent, pay their rents in bits, while Musha incorporates all of these features in one flexible platform. The team is me, a 4-times founder. I'm the real estate consultant with London Loft Investment, which is a company I founded, and I'm also a UI, UX, and product designer and co-founder of IT Solutions. While my CTO is a 3-times founder, full-stack developer, senior backend developer with Lenki, Kuda, and First Bank, which are very big financial institutions both in Africa and the UK. My third co-founder, Chizoba, who's a 2-times founder and senior software engineer at one of the biggest financial institutions in Nigeria. We all also co-founded Amplu IT Solutions. Our traction to date are 8 real estate companies we've onboarded and 5 more in the works, over 150 plus users at the moment, and 4 projects which have been onboarded plus 3 more which should be coming on stream soon. Our ask is a pre-seed round of 25K via SAFE for 18 months runway to achieve revenue traction, and the chart shows the breakdown of our request. These are our contacts. Thank you very much for listening.
Our final startup is V4 Final, ServiceNow for legal requests, pre-seed stage company at the MVP product stage, founded last year with a score of 713, grade A minus. Maddie Neustadt, founder and CEO out of Bend, United States.
Hi, I'm Maddie Neustadt, co-founder and CEO of V4 Final. We provide a legal services management platform designed for better client outcomes. I'm here to share how we're solving one of the most persistent and expensive problems facing enterprises with ongoing legal needs. The problem? Enterprises spend millions on legal work every year, yet critical deals get delayed, deprioritized, or blocked. Stakeholders are dispersed, information is scattered, and legal departments are still seen as the department of delay. When companies try to solve this with technology, The available tools focus only on speed and cost. But bad advice fast doesn't improve your bottom line. What enterprises actually need is a way to connect legal work to business impact. And that's exactly what V4 Final does. We've built an outcome-based service management platform for legal work. Think ServiceNow, but for legal requests rather than IT tickets. Our AI tools gather facts and information so lawyers can focus on legal analysis. Business stakeholders get visibility into where their requests stand, which attorneys are working on it, where it is in the overall priority queue. And the legal team gets data-driven insights on bottlenecks tied to successful business outcomes, all while protecting attorney-client privilege. A few things that set us apart. We deliver automated business intelligence, actionable insights into the business tied to client priorities, not just dashboards. Our method of matching legal requests to business outcomes is so novel that we filed patent on it. The platform is built from the ground up to protect attorney-client privilege, a non-negotiable for our customers. And it's AI agnostic, architected to scale as AI and our client needs evolve. The market opportunity is substantial. $39 billion in global TAM for service management, $2.7 billion in SAM for legal services. And we're targeting $45 million as part of our 5-year growth plan. Our business model is enterprise B2B SaaS with a land and expand go-to-market strategy. Landing is focused on our early access program, a $30,000 6-month engagement focused on a single legal request type to prove the value before a large commitment. Expand is then a full enterprise license at $125,000 annually, running on the customer's IT environment for both security and privilege, but it also lets us avoid key costs related to storage and processing. We anticipate first revenue in Q2 2026 and a cost-efficient model that quickly reaches positive cash flow. Our land and expand strategy targets a $3 million ARR after 24 customers and $45.5 million ARR by 2031. These numbers are based on a sales funnel that we are already executing. A $210,000 deal pipeline with 2 active negotiations, 4 additional qualified POC discussions, and over 70 prospects with active connections. Our expand strategy goes beyond converting POC customers into annual subscription customers, and will phase into standardized subscriptions and phase out the early access program, growing through integrations, knowledge management, and automated legal playbooks, creating stickiness and positioning for V4 Final as a valuable source of training next generation AI. The competitive landscape includes service management platforms like Jira and ServiceNow, but these are built for IT tickets, not legal work, and legal workflow tools that require expensive service contracts with hidden cost of total ownership. V4 stands apart with intuitive design, transparent pricing, and a focus on both enterprise and legal team needs. Our founding team combines the deep legal operations, and technical knowledge necessary to succeed. I bring director-level legal innovation experience at Microsoft, NetApp, and DNV, plus an engineering background from Intel. I've been recognized with awards including ALM's Innovator of the Year for in-house practice and Silicon Valley Business Journal Women of Influence. My co-founder and CTO Simon Pope built intelligence technology for the Australian government defense agencies and was involved in early autonomic computing at IBM. He's also had successful IPO exits in the past. We've worked successfully together since 2013. As Peachscore graduates, we're seeking partners rather than investment. Our customers face technology overload, and we want to help bring their tools under the V4 Final platform. We're looking for connections with companies providing critical legal AI agents, CRM platforms, and contract lifecycle management tools so that we can build integrations that make our customers' life easier. So thank you. If you have any further questions on the V4 Final platform or what we're seeking to achieve, please reach out. My contact information is below.
All right, everyone. Thank you so much for being here with us during the Peachscore+Dealum Demo Day. I'd like to thank all of our speakers that joined us today. Definitely our panelists. Amazing session. This recording of this session will be available on our YouTube page. Be sure to subscribe and follow, and you'll be able to see this replay of this session later. If you're an investor and would like to be connected with one of our founders that pitched today, feel free to reach out to anyone else in the Peachscore team or directly to the founders. We're happy to make the introductions. If you're a corporate and would like to work with us, we love our partners, as you saw, and the more global partners, the better. By all means, reach out to us. And if you're a founder interested in learning more about our program, applications are open. Feel free to apply directly online. Everything about our program is available on our website at peachscore.com. But feel free to also reach out to myself or anyone in the Peachscore team. We're more than happy to answer any questions you may have. Let me very quickly share contact information for myself, which is that. Feel free to email me or I'll connect with me on LinkedIn. I'm usually pretty good at trying to reply on LinkedIn messages. So if you have any questions, feel free to DM me there. Thank you all again for being with us. This was the April version of the Peachscore+Dealum Demo Day. Thank you all. Have a wonderful rest of your day.